perhaps with different look-back periods and different ways to calculate trends. Or, but at its root, they all get you roughly to the same place, right? I mean, if you look at a chart of dollar-yen, it doesn't really matter how you end up, which model you use for trend following. You know, when something is moving a lot like that, all of the models get you into the position. It's just, what it is just the repeated application of a simple process over time.
What do you guys do with the likes of like Bitcoin and crypto and stuff?
Yeah, we look at it. We try to. We also trade a macro fund, and we try to include it in there because at some point now there's liquid futures markets, and you know it's been somewhat sort of blessed by the SEC. We sort of think, well, is it a currency? Is it a store of value? You know, probably some portion of each of those. So we looked to include it, but the futures markets, they're not as easy to execute in, as you think in the crypto market. So currently we look with interest from afar, but we don't have positions currently.
Are you based in Newtown, Pennsylvania?
Yeah, that's right, just north of Philly.
That is by the way, folks, if you want a day trip anywhere around the metro New York area, that whole part, like Newtown, PA, that whole New Hope area, awesome, particularly in nice weather.
Yeah, that's right. It's rolling Bucks County. It's covered bridges and little river towns. Yeah,
well, that's home to the Shad Fest, I
yes,
believe.
in
right.
Stockton.
In Lambertville, yeah.
Yeah, Stockton, New Hope, the Shad Fest. So I kind of
grew up
around.
Yeah, Shad Fest.
I grew up around there. Some beautiful Bucks County. How a Brit found his way there, I have no idea. But good for you, Dave Aspel. We'll have you back on. That was interesting stuff. Dave Aspel, co-CIO, Lucas Management from lovely Newtown, Pennsylvania, home of the George School. A bunch of my buddies went there back in the day. Do you want to talk mortgages?
Yeah, I do.
I don't really, because the
But
mortgage
maybe
rates are going higher. $6.99. Erica Edelberg, she's the pro here, Chief Mortgage-Backed Security Strategist for Bloomberg Intelligence. She joins us here in our Bloomberg Interactive Broker Studio. Are you surprised that mortgage rates are kind of where they are? That with the Fed cutting rates, we haven't seen any relief?
Hi, nice to see you guys. Thanks for having me on. I can't say I'm surprised. You know, unfortunately, we were concerned that at least even just talking about tariffs, even just talking about deportation and other, potentially inflationary problems, that the long end would stop believing that the Fed, long end of the Treasury curve, could stop believing that the Fed could continue cutting rates. And keep in mind that the longer parts of the Treasury and yield curve, and that includes mortgages, which are a longer term security, are really taking into account where they think rates will be going forward, not where short rates are going now. Mm-hmm. So think of it as a forward expectation concept.
So, Paul, what's your 30-year? You don't have to say.
6 solid.
It's 6 solid.
Yeah.
So he's not refining like anytime soon, right?
And I honestly, when I took this mortgage, I said within a year I'm going to refi with a 4 handle on it.
Yeah.
And
she only asked that question so she can then
we can then follow.
Anything. I have not said anything
because
about my
then we have to ask
2.75% 30-year fix.
For those who are
those who are wondering.
Yes.
So for people like Paul.
Yes.
What do they do? Like 6 isn't terrible, right? But they don't want it. And there are a lot of people.
It's the new 4.
And there are a lot of people like Paul who was like, I'll do the 6 because I'll refi in a year or a year and a half, and like it'll be fine. When do you think that really starts to kick in?
Well, I mean, certainly what we hope is that most of the people who took out the higher rate mortgage, the underwriting standards seem to be strong enough that they can afford to keep paying it. They'll be grumpy about it, but they can afford to keep paying it. We did see when rates dipped back, not quite to your level, but dipped back to the low 6s or so this fall, that a lot of people left on the opportunity to refinance. I mean, per rate incentive, there's like the fastest speeds we've really seen in a very long time. Including 2021. So, from that perspective, the refi engine is alive and well and thriving. But on the flip side, most people, including Paul, are going to have to wait a while, we think, because the Fed has already said it's planning on cutting much less next year. And again, that doesn't even help the longer end of the market, which is looking further out. I know Ira Jersey is thinking we may even see hikes again in 2026, our rate strategist. So,
never heard of him. Where do you find value in your market, your mortgage-backed market, asset-backed market?
In the mortgage-backed market, I mean, we are somewhat optimistic for next year, if only because yields are so much higher than they've been. This is actually the highest in my 2025 outlook that I put out earlier, about a month ago. We actually emphasize the fact that this is the highest aggregate yields for the MBS index, Bloomberg MBS index, that we've seen, in decades, I think. So from that perspective, just from a yield perspective alone, and I think that's also why you're seeing a lot of fund inflows into bond funds and mortgage funds. So we think that alone will give you maybe better returns than you've had since 2019.
Oh, wow.
Yeah.
And do you own them for the returns or just like the yield? Like, is it price appreciation or is
Right.
it just
I
juicy
mean,
yield?
we unfortunately don't see a lot of price appreciation because we think yields are going to stay relatively high.
Mm-hmm.
So, maybe a marginal amount of price appreciation if we trend back towards 4% on the 10-year, for instance. I was actually calling for about 4.5 10-year at the end of 2025 and even higher in 2026. So you're really holding it for the yield and the carry right now. And from that perspective, we definitely are hearing from investors that they're trending towards the higher coupon securities then, because those aren't going to be refied in the very near term. And they do offer a lot of extra carry to compensate you for refi risk. The concern is, and this is the other thing I've been emphasizing, there's been a lot of deterioration in new production from a mortgage investor standpoint because loan sizes are so much bigger than they were as home prices appreciated. So just like you, Paul, the minute rates fall at all, we think a lot of this new production will refi.
Yep.
So it's a little bit of a gamble. So,
All right,
so
I'll
keep
wait.
in mind.
I'll wait patiently. Erica Edelberg, Chief Mortgage-Backed Security Strategist, Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker Studio. Again, the 10-year Treasury, 4.68%. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Stocks drifting lower to little change right now. The Dow actually has turned higher right now, up 60 points. Gives you an idea of some of the volatility that we're seeing today. In the S&P 500, communication services, that right now is the worst performing industry group. Healthcare among the best performers, defensive sector there. And rates still in focus. The 20-year Treasury breaching 5% for a time. And in the meantime, the Fed Governor Chris Waller said in a speech today he still expects the central bank to deliver more easing of rates this year. As we wait for the minutes of the last Fed meeting to be released this afternoon, we also heard from former Fed Vice Chair Rich Clarida. He's confident that inflation will be conquered.
Ultimately, we're going to get the rate of inflation the Fed wants, and I think the Fed wants inflation around 2%. There's always shocks and noise, but that's where we're going to end up.
Right now, the S&P 500 has turned higher. It's up 8 points. It's up 0.1%, 59.17 on the index. The Dow Jones Industrial Average, again, as I say, up 60 points right now. And the tech-heavy NASDAQ 100 is up 30 points. That's up about 0.2%. The Russell 2000 of smaller cap stocks, that is down about 0.8%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 3,000 companies in 130 industries all around the world. Well, joining us now is Allison Williams, Bloomberg Intelligence Senior Analyst, Global Banks and Asset Managers. And this is about her outlook for global asset managers for 2025. That's no small feat. We have bank earnings kicking off in a couple weeks. What are some big things and themes that you think will emerge?
So the market's momentum is obviously the big story entering 2025. And the first quarter does tend to be the seasonally strongest quarter for the global investment banking business. We also do tend to get some good flows into the asset management business. So we think we're starting off the year with strength, also noting that the world's market capitalization hit a new high in mid-December. Since then, we've seen a little bit of a sell-off, in our global equity strategy team, led by Gina Martin Adams, has actually flagged the fact that they are seeing some signs that are making them a little bit more bearish. But from an earnings perspective, keep in mind that we are the markets are so far above a year ago. We're going to see good year-over-year growth. The ETF flows are strong, bond flows are strong. So we're expecting to hear good things from the banks when they report next week. And as I said, really some good momentum entering the year.
Allison, I want to talk to you about asset management, the global asset managers, because the more I talk to this Balchunas guy, the more I kind of say, what's going to happen to all those great mutual fund companies that I grew up with as my clients, the Fidelities of the world, the Capitals of the world, the Alliances where you hung a shingle for a while. What is that business? What happens to that business?
So consolidation has been something that, as you know, for as long as we've been in the business, there's been huge calls for consolidation, because that really makes sense on paper, right? You have a business that you can scale. You have this intellectual capital that you can scale. And I think Eric Balchunas will always say, hey, Wellington and T. Rowe, why can't they get together? But as we also know, it's all about culture for these asset managers, and really culture and process is what makes active managers great, and really what they stick to. And so that's really what makes deals difficult. And also the fact that what you're buying really is a culture and a process and people. And so even though deals look good on paper, it's a lot harder to do practically speaking. But we think that, managers will continue to look to see for opportunities. Are there opportunities for fund consolidation? Are there opportunities within managers? So we do think that continues. We've also seen the traditional managers buying into the alternatives business. So active fund management has been under pressure. It is still the biggest business by assets worldwide. We just want to note that to Eric. The alternatives business is where all the growth is. PE has been a phenomenal growth story for many, many years. Private credit really getting into it and seeing some faster growth.
So I'm going to go back to banks, but there's kind of a tie over, especially when it comes to private credit. If we have William Barr stepping aside, do we anticipate less capital requirements, less stringent Fed stress tests, and does that bring them into sort of the private credit markety world again?
Well, I would say that the banks have already been participating through partnerships, and one of the best examples that we always point to is what Goldman Sachs has been doing with their asset management business, right? So for a long time, Goldman Sachs has had this merchant banking expertise, and for many decades they were investing their own balance sheet. But within the last several years, what they've said is, look, we're going to use that expertise and we're going to manage clients' money. We're going to charge a fee. Investors like this because there's less direct balance sheet risk, there's more fees. That's a business that gains higher multiples. And so they have, and they've been expanding in the private credit space with that business. And I think banks are also doing it with different partnerships. And so the banks have been active on that front, and we do expect that business to continue to expand.
So, Allison, one of the Trump trade sectors that I hear all the time has been financials, because maybe the lighter deregulation, touch maybe lower taxes, all that kind of thing. And the stocks have reacted, generally speaking. How much of that trade is still left here? I'm looking over a trailing 12 months. A lot of the big names are up 30, 40%.
Yeah, so I think, we have seen the stocks move. Part of that is earnings driven. I talked about the capital markets momentum, and part of that is sentiment driven. And to Alex's point earlier, what we're seeing, the news with regard to Barr, I think, is really just reinforcing that Trump trade, reinforcing that expectation for less regulation. And so definitely the sentiment the sentiment driver, I think we saw the stocks gained 17% in a very short period of time, when earnings estimates moved something like 3%. So that tells you that it really is the sentiment and the expectations that those earnings estimates can go even higher. I think where we're the most optimistic is the lesser antitrust scrutiny, which is going to add to M&A fees. We're very bullish on that part of the investment banking fee revenue recovery within BI. And with regard to the other regulations, so as I said, a lot of optimism has been baked in. But I think what we're going to focus on next week is really the core fundamental outlook. And I think to the extent that that can give investors some confidence, it can build into the story, because it is less regulation under Trump that I think is most exciting for some of these big banks. But also keep in mind the economic environment is better. The net interest income outlook is getting better. I already talked for a while about capital markets, but on the credit loss front, we've had 2 years of rising provisions. We're going to see that flatten out, and that's also helpful to the bank's earnings.
Looking forward to it. It's Allison's most favorite time of the quarter, those 3 weeks where she doesn't sleep. All right, Allison, thanks a lot. Really appreciate it. Allison Williams joining us, Bloomberg Intelligence Senior Analyst, Global Banks and Asset Manager, joining us on the Global Asset Manager Outlook for 2025. I just want to update here, just watching these pictures of the fire in Los Angeles. I don't think I've seen anything like this. This is the most destructive windstorm to strike the LA area in 14 years. So far, the wildfires have killed 2 people, destroying homes, sending thousands of residents just fleeing, literally, for their lives. There's video of cars abandoned and people just running. Yeah,
this is absolutely crazy. And we talked to Rob Carolan, Bloomberg's meteorologist, and he says the high winds, which are really the problem here, another 6 to 10 hours, as he was saying. So kind of through the evening here time in California. One of my offspring lives in Los Angeles, fortunately in an area that's not affected by this, but he says the smoke's everywhere, and you can see it just from everywhere. And you can smell it. I mean, all the things we've heard before, but I think it's just the magnitude. More than 1,000 buildings have already been destroyed.
And the speed.
Yeah.
How big it is, and then the speed and those winds, as you were just talking about. So we will obviously keep you updated for headlines on that as they cross. All right, coming up, Margot Wenzel is a Bloomberg Intelligence Senior ESG Research Associate. So Paul's going to ask her, is ESG still a thing? And then we'll talk about renewable energy. This is Bloomberg.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Talk a little bit of renewable energy. There's some arguments out there that there may be some M&A in that space that we need to be on the watch for in 2025. Margot Wenzel joins us. She's a senior ESG research associate, Bloomberg Intelligence, in our Bloomberg Interactive Broker Studio, which is more than I can say for her bosses, who mail it in from Princeton pretty much every day, if not parts farther away. Margot, thanks so much for joining us here. Talk to us about the renewable space. Is it ripe for some M&A, some consolidation in that space? What do you guys think?
Yeah, thank you so much for having me today. It's a really small market, I will say. It's only about 2% of total deals currently, but it's growing pretty quickly. It's grown around 65% if we compare 2020 to 2024 versus the prior decade. And if we look at the overall market, just zooming out a little bit, that has grown around 30%. So there's definitely some focus there for this particular part of the market.
Does it slow down under President-elect Trump and the administration?
I think there's certainly risk for that. The changing administration definitely presents some challenges. We saw President Trump yesterday talk about how there will be no wind build out under his
offshore wind, yeah.
Offshore wind, yep. Which it presents a challenge, but I think we do see some longer term key drivers that could continue to propel the momentum of this market, especially things like companies have set decarbonization goals. 98% of the S&P 500 have set emissions reduction targets, a lot of those ending term in 2030. They've cited M&A as a key strategy for that. And then secondly, something that everyone is talking about, AI, data center build out. Yeah. We are going to need so much energy for that. IEA is saying demand's going to increase 4% just this year compared to last year, with renewables meeting like 75% of that. So I think those long-term drivers are important to note.
You mentioned the President-elect Trump's comments yesterday about wind, and that sent a lot of the shares, turbine makers, most of the European companies down 7-8% today.
Ørsted, Siemens Energy. Yeah.
Yep, exactly right. So, so generally speaking, in the renewable space, where is the growth here?
It's interesting because renewable energy costs have actually dropped quite a lot. We look at solar. Solar costs has come down over 80% since 2010. Wind over 40%. I think it's important to note what Alex mentioned about it's offshore wind. Offshore wind has faced a lot of challenges recently with regards to supply chain issues and rising costs. It's interesting because last year, 3 of the biggest deals that we saw in the renewable energy M&A space were actually electric utilities selling off stakes in their offshore wind, right. And private equity buying that. And that was so that they could generate some cash flow to pay off those costs. So it's interesting.
Where do you think in renewables we'll see the most action? Because renewables is a huge bucket.
Solar,
like we might wind, you got renewable natural gas. I mean, right. Is nuclear now included in renewables? Is natural gas included in renewables? I think it depends on who you ask, right?
Right.
Clean coal, that's a thing.
Right. I think from a cost standpoint, solar has been adopted pretty widely. We're seeing a lot of companies acquiring solar assets. So I think solar is a place to watch. And as you mentioned, nuclear energy has been a huge focus recently. There's still opportunity for cost to come down there, but definitely a focus.
So where are we in terms of, you think, kind of just the evolution to deploying renewable energy? Where are we vis-a-vis the goals? Is the U.S. different from other parts of the world?
Yeah, I think the IRA has definitely improved adoption in the U.S. We're probably seeing a little bit more adoption in Europe, just from a policy standpoint, but yeah, I guess it'll be interesting to see what happens.
Yeah, it feels like the 2 areas, definitely EVs is going to be a risk, and the Department of Loan programs, right? But that would go to fund many different things. Like it wouldn't just be like super weird green techies things. It was like real projects also. Do those threats impact M&A, or as you pointed out, are these like longer term, multi-year decisions?
I think they could impact renewable energy M&A in the short term. I mean, the IRA it's a broad piece of legislation.
Inflation Reduction Act. I just remembered that.
Oh, thank you. Yeah, sorry.
But now, is there a risk that President Trump could unwind the Inflation Reduction Act?
Yeah, I mean, it's such a broad piece of legislation. There are so many policies involved. He's been pretty vocal about rolling back certain parts of it, like the EV tax credits, for example, but it's pretty unclear exactly how that would work, and it would take a lot of time to really unwind policies within the IRA.
And some of it you can't do unless you have Congress, too, so there is.
Right.
So there is that as well. Last question. Paul didn't ask it, so I will. Is ESG still a thing?
Yes.
But there's a but. I can look at her face and see there's a but.
I think ESG is still a thing. At the end of the day, I think ESG is broad. It's good investing. We have an ESG team here within BI, and the research we do and will continue to do is going to be around, are there investment risks and opportunities associated with ESG themes? So I think it's here to stay, but we are weathering some challenges associated with the changing administration.
Yep, very true. But I think it's, outside of the U.S., I mean, you talk to Tim Craighead at Bloomberg Intelligence, who's one of our senior folks over in London. He says it's still a huge thing for European investors. Right. And then you see that in the funds flows as well to ESG ETFs. So it's kind of a U.S.-centric thing where it's gotten a little bit politicized here. So let's see how that plays out over time. Margot Wetzel, thank you so much for joining us. Appreciate it. Senior ESG Research Associate from Bloomberg Intelligence, a Yukon Husky. Always welcome in here. Looking at the markets here, turned a little bit green. We'll take that. It's up about 7 points. The Dow's up 21 points, and the Nasdaq's up 7 points. So we're going to have a busy couple of days. We won't be here tomorrow, Bloomberg Intelligence, because we'll be coverage of former President Carter's funeral. So that'll be a full coverage of that from Washington, D.C. Balance of Power with Joe Matthew. That comes up next. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Donald Trump makes his return to Washington today. Welcome to the fastest show in politics, as the president-elect arrives for the funeral this week of President Jimmy Carter, but also holding meetings today with Republican lawmakers. We'll be following them as the Biden administration works to complete its job. Of course, we're going to bring you a special interview here with one of the most pivotal voices on markets and finance in this White House, Gary Gensler, the chair of the Securities and Exchange Commission. My colleague here at Bloomberg, David Gura, is sitting down with Mr. Gensler right now at the SEC, and we bring you there live for an interview you'll only hear on Bloomberg. Let's listen.
Thank you very much, and welcome to our listeners and viewers worldwide. I'm here with Chair Gary Gensler in his office in Washington, D.C. Great to speak with you.
Great to be with you, David.
You've had a very active agenda during your tenure here. I want to get to as much of that as I can, but I want to start first just by asking you how you're feeling here with less than 2 weeks left in your term. You have been subject to a fair amount of attacks, some vitriol. How have you processed all of that?
It's a great privilege to be in a role like this. I'm the 33rd chair. It's a big country. A lot of people could do this job. So I start with it's just such a privilege to be here, and thank you to Joe Biden for asking me to do it. But what's remarkable about this role is it oversees the $120 trillion capital market, which touches everything in our economy, because you've got to raise money for most of what we do in our economy, and people save. So I feel terrific. You ask about the attacks and things like that. That's what public policy is about. You walk into this central square and you debate these important things for 330 million Americans. I've worked over the years with Hillary Clinton on a number of campaigns, and I remember Hillary saying once, like, if you're not willing to be attacked, you can't go into the public square and debate policy. And so I think it's part of our great democracy.
I look at who is inveighing against you and who's throwing that invective, and it's the president-elect, it's the world's richest man. Does it feel different to you than what you, I'm sure, experienced after the global financial crisis when you were at the CFTC? Has the atmosphere, has the environment changed for regulators like yourself?
Well, I think it does change. What we do here at this great agency is look out for everyday Americans, people just trying to save for a better future and try to move through things that help them, like we've done, like even shortening the settlement cycle from 2 days to 1 day. Might sound geeky behind the scenes, but it means you get your money 1 day faster, for instance, or getting privacy notices. There was no federal rule that you needed to get a notice if your data was hacked, and we put in place some rules to do that. So we're looking out for everyday Americans, trying to lower the cost of the markets to trade stocks, to trade bonds. But it doesn't surprise me that then there's some in the middle of the market. They're called brokers, they're called dealers, they're called intermediaries, stock exchanges, who they like their business model. And if we're changing the rules to benefit everyday Americans, they might have thoughts on that and object. And that's part of the process. But our clients ultimately, people at their kitchen tables.
Let me ask you about one facet of that $120 million trillion.
Trillion. It's a big number.
It's a T, with a T. And that's crypto. And you often will point out it's a small sliver of that total multi-trillion-dollar package. But you came into this job, you gave a big speech in which you analogized the crypto world to the Wild West. I guess that makes you the sheriff. So as you get ready to hang up your spurs, is it less of a Wild West? I'm really belaboring the metaphor, but is it less of a Wild West than it was as you leave this office?
My daughters, if they ever watch this interview, will ask, where are your spurs, Dad? I think that we've done some good things. Look, I came in, my predecessor, Jay Clayton, who was in this office, had also tried to address this new emerging part of finance. And as you say, it's less than 1% of our overall financial markets. But it was then when Jay was trying to address it, and he brought 80 enforcement actions in this area. We've brought in about 100 in our 4 years. It was consistent. It's maybe about 5% of what we do in our law enforcement. That means there's 95%, in a sense, unfortunately, about other things, scammers and fraudsters and so forth. But in this field, it's rife with bad actors. And let me just split the field into two just for a minute. The public knows a lot about Bitcoin, which is, depending upon its market value on any given day, is 2/3 to 80% of the market value of crypto. And then there's everything else, or some people say Bitcoin and Ethereum and everything else. These 10 or 15,000 projects, they're raising money from the public, and the public's investing, or the public's investing, hoping for a better future. I've been around finance for over 4 decades, and everything in the markets trade on a mixture of fundamentals and sentiment at any given time. But I've never seen a field that's so much wrapped up in sentiment and not so much about fundamentals. And these 10,000 to 15,000 projects, many of them will not survive. They're like venture capital investments. They're not going to survive. But there are also a fair number of small pump and dump schemes and other things in this. And of course, we've lived through a few years where, they became notorious, but they're in jail. The Sam Bankman-Frieds and the CZs and the Do Kwons, where tens of billions of dollars were lost by investors.
Can I ask you about those? Because early on when you talked about enforcement, you said bringing high-profile cases could lead to a change in behavior. Are you satisfied that those cases has led to a change in behavior in this space in particular?
It's a field that built up around non-compliance. And I'm proud of what we've done, building on what Chair Clayton and others had done previously. I think there's still work to be done, particularly I'm saying about these 10 or 15,000 alternative coins that are there, and the intermediaries themselves. I think there's still work to be done. And I think the public is probably aware of this, and less than 10% of the public invests in this field. I think various Federal Reserve, and even we did a survey here, these public figures, it's somewhere between 7 and 9% of the public. Should be aware these are highly speculative, volatile investments, and they're not getting the full and fair disclosure that's appropriate. What we're about here at the Securities and Exchange Commission for 90 years is letting the public decide what they want to invest in. The proper disclosure. And secondly, that the intermediaries, the brokers, the stock exchanges, the advisors, are giving that advice and doing what they're doing without fraud, manipulation, and so forth.
Settle something for me, because I think when you came into office, a lot of people looked at your immediate background, having researched a lot of digital assets, worked on them at MIT, and thought that you would be perhaps a champion of them. Has there been an evolution in the way that you approach crypto over that transition from academia to here, or while you've been
Here's
here?
The evolution.
People think you are somebody who's adamantly opposed to
Here's
crypto.
the evolution. When you're in academia or when you're not in this job, you can study something and observe it, as I did, and try to teach students what's the value proposition about this new technology, what's the value proposition of this new investment vehicles. But then when you're in this job, this is a chair of a 5-member commission over roughly 5,000 people that's a law enforcement agency. And so now one gets in this chair, building upon my predecessor had brought 80 cases, so we brought about 100. And this is a field rife with challenges and non-compliance with the securities laws. So sometimes people, you take an oath of office, you do what you can to protect the investing public.
Just another question about evolution of thinking, turning to the climate-related rules that have been passed by the SEC. Some say that you fashioned yourself as kind of a climate crusader.
No.
Are they wrong in that supposition?
I haven't heard that. I'm a securities guy. I was at Goldman Sachs for 18 years, a fair number of years ago now. And I deeply believe in markets. And I came into a role that there were some outsiders that said, use the securities laws to promote an agenda, but we're just a securities regulator, and I deeply believe that. But what we found is that not just hundreds, but over 1,000 companies were already making disclosures to their investors about climate risks. And I'm very proud of the work we did to bring some consistency in those disclosures, all based in materiality, meaning the only thing that the various investors need to look to, or the only thing the public companies would need to do is to make disclosures about their material greenhouse gas emissions, and not their supply chain, just their emissions and how they manage certain risk in that field. One interesting number, of the top 1,000 companies in the U.S. and the capital markets, what percentage of them do you think already make greenhouse gas disclosures?
No, is the majority?
It's over 60%. And so investors, we heard from not just hundreds, but thousands of investors that say they make decisions over those material disclosures. So our role is just to try to bring some consistency to that.
Chair Gensler and I are going to keep talking. The full interview will be available on the Big Take podcast. I'll send it back to you in New York.
All right, David Gura, thank you so much for a great conversation, and looking forward to hearing more in the podcast. I'm Joe Matthew in Washington. Really glad we could bring that to you right at the top of the Wednesday edition of Balance of Power. Thank you for joining us here on Bloomberg Radio, on the satellite, and on YouTube, where you can always find us. Search Bloomberg Business News Live. An interesting dive there with the now outgoing chair of the SEC, Gary Gensler, bringing us inside his head a little bit, talking about his tenure and work that he says he's very proud of in this time working for Joe Biden. Talked about crypto quite a bit, didn't we? And we heard about climate change as well. and a fascinating interview that as I mentioned, will bring us to more in the form of the podcast. But we wanted to spend some time with Lydia to talk about this. It's her specialty, covering the SEC. Lydia Bayou, Bloomberg News reporter covering SEC and incidentally CFTC, where we also have some news today. And she's with me, having listened to that interview here at the table. Lydia, it's great to see you. Thank you for coming in.
My pleasure.
He's talking about kind of cataloging some of the highlights, which you're going to do when you leave a job like this, right? He talked about shortening the settlement cycle, which I remember you bringing to us here on this program, getting privacy notices if you're hacked. What will be his lasting impact, his achievement that people will talk about?
You know, Gary Gensler always likes to talk about himself as a markets guy, and I think that's really the place where he'll have a lasting impact. It's true, he did shorten the settlement cycle. He also pushed through major changes to the treasury markets, central clearing requirements that are still in the works, haven't come online yet, but firms are working towards that. In theory, that'll bring about a lot more stability in the treasury market. Hopefully, we'll see a little bit less turmoil when there are hiccups. Otherwise, his other big legacy is crypto. And we're about to see a lot of changes for that market in the next administration.
Well, that's for sure. Let's get into it. He made reference to the number of enforcement actions made by his predecessor, which I wouldn't have known, 80 versus the roughly 100 from this SEC. He talked about we're building on what Chair Clayton did. Is that fair? And, well, has Gary Gensler been treated fairly with his approach, the way the media, the way the crypto world has framed his approach to this emerging technology, as he calls it?
Gensler has often made the point that he's sort of picked up the baton from Jay Clayton, who was the chairman during the first Trump administration. But there were some marked differences there. A lot of those enforcement cases at the time focused on initial coin offerings, ICOs, which were the big thing in crypto at the time. Gensler, as he mentioned about his focus on intermediaries, has focused a lot more on exchanges, on firms that are issuing tokens. That's some parallels there to Clayton. I mean, there's some fairness. It's not quite apples and oranges, but you know, there are differences too. The crypto market evolved a lot in the past few years, and his enforcement, I think, the crypto industry has looked on for going after what he says are bad actors, and what they would say are they're just looking to comply with rules.
Think of how much of that interview is about crypto, though. And our colleague David Gore is very good at this. That's for a reason. He talked about it rife with bad actors, pump and dump schemes. Will he be remembered as the guy who stood in the way of progress?
By a certain cohort of the market, I think so, certainly by the industry. They're pretty chuffed about the incoming administration and what lies ahead. I think that others who are a lot more skeptical of that market are probably going to look back on Gensler's tenure and think, you know, he tried to do what he could.
Yeah. I'm asking all the questions that are going to get you in trouble, of course. But, you know, we talked about crypto as well with the now outgoing CFTC chair. This was back in October. Rostin Benham joined us from world headquarters in New York. He just earlier today announced his plans to leave the agency, to retire. Here's what he said about crypto.
We've seen a shift, I think, in the sentiment of Congress over the past, call it 12 months. Certainly different than 2 or 3 years ago when I was first talking about this, and even 5 or 6 years ago when this first became an issue for the CFTC, and I started having thoughts internally and discussing it. But I do think as we get into a new administration, a new president, and a new Congress, I think there's going to be an appetite, given that sustainability of the asset class and the desire from a lot of retail and institutional investors to see a regulatory structure around crypto.
So in our remaining minute or so here, Lydia, talk about Donald Trump's job and replacing him, what that will mean for the authority of CTFC whether that will change or not when it comes to crypto.
So it's interesting that Donald Trump hasn't yet announced a new CFTC chair. Everyone's sort of waiting for that to happen at any moment now. And that's notable because so many industry players would really love, and you heard it from Benham himself, would love for the CFTC to become sort of the primary regulator where you can go as an exchange and get registered and sort of be in compliance with financial rules. And TBD on whether the next admin can achieve that, but Benham himself has said in announcing his resignation that he's going to continue pushing for that to be the case even after he leaves office.
Glad you could come by. We should do this more often. Lydia Bayou, nice to see you. With us in Washington here at the table on Balance of Power, I'm Joe Matthew. We'll have a lot more straight ahead as we haven't even touched the news on Capitol Hill today. A lot to cover with regard to Congress, the sequencing, reconciliation, and the confirmation process. It's all coming together as we speak here. Now, just 13 days away from Donald Trump's inauguration. Jimmy Carter's funeral set for tomorrow here in Washington. We'll talk about that as well in our political panel later on this hour. Stay with us on the fastest show in politics. And thanks again to David Gura and Gary Gensler for getting us rolling here on the Wednesday edition. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are lower across the board. We have got the Dow, the S&P, NASDAQ all in the red as traders refrain from making big bets right now. The S&P 500 index down 14, drop now of 0.2%. The Dow is down 88, also down 0.2%, while NASDAQ's lower by 0.5%. 10-year, 4.68%. The 2-year, right now at 4.27%. Gold up $19 the ounce, $26.67. That's an advance of 0.7%. And a retreat for crude, WTI, down now by 1.1%, $73.41 a barrel. Bitcoin right now down 2.8%, 93,717 on Bitcoin. Outgoing SEC Chair Gary Gensler just wrapping up an interview here on Balance of Power with our David Gura. They discussed a number of topics, including regulation of cryptocurrencies.
I've been around finance for over 4 decades, and everything in the markets trade on a mixture of fundamentals and sentiment at any given time. But I've never seen a field that's so much wrapped up in sentiment and not so much about fundamentals.
And Gensler did say he is proud of what has been done on crypto, but says there is more work to do. Again, we've got Bitcoin now down by 2.9%, 93,652. Recapping stocks lower, S&P down 0.3%. For our on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host here is Joe Matthew.
All right, Charlie Pellet, thank you so much, Charlie. Great to see you here on the Wednesday edition of Balance of Power. We'll get back to Charlie for more on the markets later on this hour as we come together every day here at this time in Washington to talk politics and the policies that impact the markets. There's a lot about to happen here in the Capitol that investors are going to want to know about, from tax cuts, right, to funding the government, to tariffs. All of this is being decided now, not to mention the border, which could have a significant impact on the job market. I keep reading today about salty Republicans. Capital S-A-L-T, lowercase y. Salty Republicans concerned about the tax code. Most of them live in New York, New Jersey, right? Connecticut and California. They're going to Mar-a-Lago. It's on to the winter White House. I keep thinking those salty Republicans. It reminds me of Salty Brine, the iconic broadcaster in southern New England whose catchphrase was, "No school in Foster, Gloucester," because they had so many snow days in that school district. Kind of like here in Washington, this is day 3 of no school this week. The plows are still pushing snow around, and we still don't see pavement in many areas, so who could blame them for going south? The meetings that will take place at Mar-a-Lago over the next several days, and the one today in Washington, will help to answer the questions that we have been asking. So, right, tonight, Donald Trump, Washington, sits down with Republicans in the Senate. Thursday, Republican governors travel to Florida. They're going to be at Mar-a-Lago, including Ron DeSantis. And then the SALT group goes this weekend. Big meeting on Saturday, including, by the way, Mike Lawler, the congressman from New York, talked about lifting the SALT cap. This is a serious issue for him. Right here on Bloomberg earlier this morning on surveillance.
The $10,000 cap is woefully insufficient. It's had a negative impact on states like New York. Taxpayers should not be penalized by living in a high-tax state. Ultimately, our Senate and House Republican majorities are going to have to work together. Nobody's going to get everything they want out of this. There's going to have to be a good faith negotiation if we have any chance of passing a reconciliation bill.
Nobody's going to get everything they want out of this. We could say that about any story we're talking about here. But Lawler has refiled his bill to bump the current SALT cap to $100,000. Single filers, $200,000 for married couples filing jointly. And that's where we start our conversation with Zach Cohen. Really glad that Zach is on the Hill today to join us. He's at Bloomberg Tax. I almost said Bloomberg Government, Zach. You're still covering Congress for us. Can you help me get a tax return this year?
Well, I mean, this SALT cap is certainly something that's going to be of interest to all of our listeners. Plenty of expensive neighborhoods here in the D.C. area as well that are hit with high state and local tax bills every year, and then looking for some relief on their federal return. Have since 2018, after the passage of the first Trump tax cuts, have been limited to $10,000 of how much of that state and local tax they can deduct from their federal return. And this is something that's been a bee in the bonnet of people like Mike Lawler, Nick LaLota from Long Island, Tom Kane from New Jersey, for years now have been trying to lift this cap, either eliminate it entirely or to find some middle ground where it's increased. Some of President-elect Trump's advisors have told our colleagues that they're looking at doubling that current cap from $10,000 to $20,000, which people like Lawler and LaLota have said is woefully insufficient to helping some folks who, while making more than your average American, also face higher costs than your average American. And so as folks decamp to Mar-a-Lago in Florida this weekend, some of these lawmakers, along with the president-elect, trying to find a middle ground on this issue, which could be quite expensive, is going to be key to unlocking the entire tax bill, which has ramifications not just for individuals and families, but for businesses' tax rates next year as well.
Well, interesting. You know, so the SALT crew's going to Florida, but so are other groups. The Freedom Caucus is going to be there too, Zach, how do they feel about this? Because we've heard this is a giveaway to millionaires who live in rich states. Why should members of the Freedom Caucus or lawmakers in the South who don't have these property tax worries get on board here?
Right, because you have these Republicans from high tax states who are looking for a rather expensive relief for some of their constituents in places like New York and New Jersey, California, while you have people in the House Freedom Caucus as well as fiscal hawks in the Senate who are saying, look, we've got to tackle the deficit. The current score on extending the Trump tax cuts for another 10 years is over $4 trillion. Although they would dispute that particular calculation, they're concerned that overall these reconciliation bills need to have some form of lowering the deficit and ultimately the national debt. And so things like the SALT cap, which would be a change to current policy and would be rather expensive, they're going to be skeptical of. And so they're also going down to Mar-a-Lago. Major tax writers were also going to be there because tax remains one of the key issues that they have to solve in this budget reconciliation bill, whether it's split into two pieces or if it's all tackled in the first 100, 200 days of a second Trump administration.
You picture them out at the patio at Mar-a-Lago, you know, they got the papers out with the iced teas on. They were going to figure this all out now, which by the way, Zach, I thought they were going to do at the Army-Navy game. I thought this was going to be figured out over nachos and wings, but I know I'm joking around here, but at what point do we get some direction from the president-elect? At one point, do leaders on Capitol Hill say, no, enough, we're going to do this in either one big, beautiful bill, or we're going to have two reconciliation bills, and we're going to do this without Democrats? Who finally puts their foot down and says, here's the sequence?
Yeah, I was talking to a lobbyist about this, and he was like, they really need to come to a decision sooner rather than later, because this question of when to tackle the tax bill has to happen before they can figure out what is going to be in it or how big. And so certainly President-elect Trump has said he prefers to tackle tax pretty early. Our colleagues have reported that people like Stephen Moore, Arthur Laffer, Larry Kudlow, some of Trump's informal economic advisors have been urging him to tackle tax early in the administration in hopes of not waiting until the end of 2025 when the deadline for those Trump tax cuts expire and tax rates would increase across the board for individuals and families. On the other hand, you have people like Stephen Miller who have been looking to quickly tackle a border security bill. People like Lindsey Graham, the incoming Senate budget chair, has agreed with him on that. And of course, Majority Leader John Thune would prefer to punt on a tax bill so that they can deal with border energy policy first and then turn to the tax bill later in the year, maybe paired with some Doge-sized multi-trillion-dollar cuts from Elon Musk and Vivek Ramaswamy. We'll see at the end of the day which path they go down. I was talking to the House Budget Committee chair yesterday, and he said we're going to mark up a budget resolution that's going to include a tax title early in the year, as early as next month, which would sort of start this process. But there's a number of off-ramps throughout it. And all of this, we should point out, is only complicated because Republicans have decided they're not going to work with Democrats on any of this because they're using something called the budget reconciliation process that allows them to go around a filibuster in the Senate led by likely Democrats. And so this question of when they take up a tax bill and in what package really needs to be worked out pretty soon if they have any hopes of getting any of it done by the end of the year.
Well, you know, and I guess that goes for confirmations as well, Zach. This is all part of the transition here. When we had recent events unfold in New Orleans and in Las Vegas, there was a thought that, gosh, we need to speed up the confirmation process for the national security team. That cry seems to have died out a bit, but there is an ask now by John Thune and others in the Senate. Who do you guys want to have ready to confirm on day one? Can we confirm, for instance, a Marco Rubio on the day of the inauguration, you know, versus Pete Hegseth and others who, you know, they're waiting on some pretty tough hearings, FBI background checks and other stuff. Zach, how is this going to work? Can we see day one confirmations?
Certainly wouldn't be unprecedented for then President Trump to formally submit a nomination to Congress, to the Senate, for his cabinet picks, and then for the Senate to quickly vote on those nominations. That's happened in previous administrations, which is why we're going to start to see some confirmation hearings next week, which is the earliest that some of these committees, now they've been set up as of yesterday, to be able to schedule those meetings, to have these nominees before them in a public setting. A lot of them have been on the Hill. I ran into Scott Bessent, the nominee for Treasury Secretary, yesterday, meeting with Senator John Cornyn, a member of the Tax Writing Finance Committee. But these hearings are really important because it gives every lawmaker a chance to publicly draw out commitments from these nominees before they're confirmed on whatever their pet project is. And so certainly there's an appetite from Senate Republicans who have set the schedule to try to have some of these nominees in place early. But there's various paperwork issues that are holding up a lot of these nominees. And so they really are under a time crunch to try to get these done. Not just in the fiscal space, but as you mentioned, in national security. Hegseth is one of the first people getting a hearing. The DNI nominee, Tulsi Gabbard, I believe, is due for a hearing pretty soon. And so these are the folks that they really want early. It's just a question of whether they'll be able to get all the steps done that would allow them to do that.
Hegseth, looks like next Tuesday we're planning for the 14th here. Senator Elizabeth Warren made public already her list of 72 questions that she has for him as part of a 33-page letter. And if you read through this, Zach, you have a pretty good idea of how fun this is going to be for Pete Hegseth. What is he in for next week?
I mean, these hearings are bread and butter for Congress. It gives them an opportunity to draw out these nominees and try to, you know, if you're trying to oppose their nomination, a way to try to get them to say something embarrassing that would be disqualifying for their nomination. Certainly unusual to see cabinet appointees fail either on the floor or in general, although we just saw Matt Gaetz, the first nominee to be Attorney General from President-elect Trump, was sidelined before he could even formally be nominated, and now he's no longer in Congress because of that. And so there's a cautionary tale there for the Trump transition team to make sure that these nominees are up to snuff, are going through the vetting process, and that there are no skeletons in their closet that they're not aware of. I think that's why there's been so much public reporting about Hegseth in particular, and some of his past allegations of sexual misconduct that have dogged his nomination and nearly cost the support of people like Joni Ernst, the Republican from Iowa. And so there's certainly time to go before these folks are in place, but it's very hard to pressure them once they're in office. This is the moment when senators have the most leverage, and that's why you're seeing people like Senator Elizabeth Warren, a relatively new member of the Armed Services Committee, use this as an opportunity to get as much information as they can.
Great to have you back, Zach. I'm not sure we ever had anyone from Bloomberg Tax before. I picture a bunch of people with green visors behind Zach Cohen. Our panel is up next. Much more on the confirmations here only on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with word of a major power deal said to be in the works. Sources tell Bloomberg Constellation Energy is nearing an acquisition of Calpine in what would be one of the biggest ever deals in the power generation sector. Right now, we do have Constellation Energy shares lower by 8.4%. The Dow, the S&P, NASDAQ all trading lower right now. We have seen stocks swinging between gains and losses, but the S&P right now below the psychologically important round number of 5,900, 5,880. That is a drop of 0.5%. We've got the Dow down 163 points, a decline there of 0.4. NASDAQ down 144, a decline of 0.7%. 10-year 4.69% with a 2-year that's yielding 4.28%. Spot gold up $3 the ounce. Little changed, up 0.1%. Gold at $26.52 the ounce, and West Texas Intermediate crude down 1.2%, $73.34 a barrel. Bitcoin right now down 3%. Bitcoin at 93,570. There are a pair of reports on America's labor market today, and the news is mixed as we hear from Bloomberg's Vinny Del Giudice.
Payroll processor ADP reports business hiring slowed in December, a gain of 122,000 jobs, the smallest in 4 months. Job cuts, meantime, moderated, with weekly jobless claims falling to 201,000, the fewest in almost a year. The data set the stage for the Labor Department's monthly jobs report on Friday. Economists see December's U.S. unemployment rate holding steady at 4.2%. Vinny Del Giudice, Bloomberg Radio.
And again, repeating our top stories, sources tell Bloomberg Constellation Energy is nearing an acquisition of Calpine in what would be one of the biggest ever deals in the power generation sector. Recapping, S&P down 25, down 0.4%. The 10-year, 4.69%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Once again, your host, here is Joe Matthew.
All right, Charlie Pellet from New York. Thank you, sir, with a live update on the markets. We'll stick with Charlie, of course, as we always do here on the fastest show in politics. Another update straight ahead here as we keep our eyes on stocks, bonds, crypto, and this market ahead of the Trump administration with a lot of questions. We're going to talk about this about 20 minutes from now. We'll be joined by former Congressman Patrick McHenry here at the table, former chair of the House Financial Services Committee, and I'll remind you, he actually held the speaker's gavel for a brief period of time when we weren't sure exactly what was happening in the House of Representatives. He'll be with us now that he is out of Congress to share his personal views on what's going on here. Next week ought to be something, as we were talking with Zach Cohen. When it comes to these confirmation hearings, Pete Hegseth gets his day on Tuesday, it looks like. And Elizabeth Warren has already given us a good sense of some of the questions that he's going to hear. They're going to get pretty chippy. Whether it's Hegseth, Tulsi Gabbard, RFK Jr., some of these have not been scheduled. And so John Thune, the Republican leader now in the Senate, is reaching out to Democrats, according to Politico, to find out, are there any of these people we can get done easily here and maybe have a confirmation on the first day? And the names are the same that keep coming up. Marco Rubio, right, Secretary of State, and Elise Stefanik, Donald Trump's pick to be UN ambassador. They, too, will get hearings next week. Rubio's on the 15th. Stefanik is the day later. The idea to actually have something take place in the hours, maybe even the minutes after Donald Trump is sworn into office. And that's where we start our conversation with our political panel. Rick Davis is here, Republican strategist and partner at Stone Court Capital, Bloomberg Politics contributor, and joined today by Christy Setzer, I believe making her debut here on the early edition of Balance of Power. Christy, welcome to the Elephant, president, founder of New Heights Communications, our Democratic strategist. Great to have you both here. Rick, I'm not sure what you make of this, but you've been through a lot of confirmation processes before, and I'll ask you about the tough ones, the Hegseths and so forth. But what do you make of the day one confirmations? Can John Thune pull off a couple?
Yeah, first of all, I like the concept. I mean, we tend to spend way too much time in Washington studying our naval. Donald Trump did a good job of getting a lot of these people out in the public domain, up on the Hill, meeting with the senators, doing their work. Really much quicker than any recent administration that I can recall. And so should he get some benefit from that? Sure. And there is this thing, that is typical in Congress. Former members get better treatment than those who weren't. Yeah. And so Lee Stefanik and Marco Rubio certainly fall into that category, and I would think would be a good way to start an administration of anybody's is to be able to get at least those people teed up and confirmed on day one. You don't want to violate too many rules and norms, but in this case, I think it sends a great message that Congress is ready to work with the president to get his agenda done as quickly as possible.
All right, Christy, the call's going out to Democrats. Will they be there to help make this happen? With specifically the names we're talking about, which appear to be pretty much on a glide path to confirmation. Why not do it on the first day?
I actually think the Democrats are going to help, or at least they are aware of the fact that they can only control certain things. Look, obviously, Republicans can lose 3 votes. I don't see, especially for people like Marco Rubio and Lee Stefanik, them losing more than that. Again, keep it in historical perspective. It is very rare for one of the president's cabinet nominees to not get through, even with people like, who were Matt Gaetz, Pete Hegseth, et cetera. Obviously, Matt Gaetz was an anomaly that, in fact, he had to withdraw his nomination. So I don't see that there's going to be much drama on those people. And I do believe that Democrats, again, are aware of the things they can control, which is to say, one, they can control some of the media narrative about some of the more exceptional, not in a good way, nominees. And they can control some things as it relates to the process in terms of maybe delaying, slowing down some of the process. And so, no, I don't see that they're going to reserve their firepower for someone like Marco Rubio, who I think even Democrats consider kind of a normie.
Rubio, as I mentioned, would be a week from today. Before that happens, Pete Hegseth sits down for his hearing. And boy, Rick, you've had the unique experience of preparing some pretty high-level people for confirmation hearings, going through murder boards. You've prepared politicians and elected officials, candidates for televised debates. These are really high-pressure situations. And I would love for you to bring us inside the process here, because we know what's happening on the other side of the dais. Senator Elizabeth Warren, Armed Services Committee, out with a 33-page letter in which she poses the 72 questions she wants Pete Hegseth to answer. And you know where these are coming from here. She's asking about his record of organizational mismanagement, to use her term, Hegseth's excessive drinking, allegations of sexual assault and harassment by Hegseth, his stated opposition to women serving in combat roles in the military, his vocal threats to politicize and undermine the military. Rick, I'm only on number 5. This thing goes on quite some ways, and I'm wondering what you expect from this hearing and how Hegseth prepares for that. Will he have his family behind him?
Yeah, a little bit on preparation. 99% of the people who are in a confirmation hearing are going to get confirmed. Usually there's a problem with a nominee. They don't get a hearing. They get it worked out in advance, and that person is replaced by someone who can get confirmed. So it's a rare thing to have a confirmation hearing in a committee, especially one of this import, not knowing that you're going to get confirmed. And so the whole theme is do no harm. Don't say or do anything that makes news, that is controversial, that puts you in a bad light or creates any kind of distance between you and the administration you are planning on serving. That being said, this one's already controversial. And the fact that some of it does have to do with issues with his conduct around women, absolutely want my wife and family there. It's not that you get any less grilling from the committee, but it does make the point that today Pete Hegseth is a family man, and that his family supports his efforts to be in this administration. So the optics do matter. But really, it's just survival of the Q&A. Remember, everyone is time limited on how much they can do. There's no chance that Elizabeth Warren gets all 70 of her questions asked in the committee hearing. So at the end of the day, written response to follow. And so, yeah, I think that it's a lot of orchestration, especially in these high-profile confirmations that'll actually be seen on television. Most aren't. And the whole goal is to do no harm. And of course, with his experience, Pete Hegseth's experience on Fox News, you would think he would learn the pluses and minuses of good TV conduct.
Let's get into this for a minute, Christy, because Senator Warren ends her 33-page letter by writing, quote, "Your confirmation as Secretary of Defense would be detrimental to our national security and disrespect a diverse array of service members who are willing to sacrifice for our country," unquote. Is his confirmation in jeopardy or not?
So in contrast to what I just said about how rare it is for nominees to not get through and how Democrats need to pick their battles, this is a battle that we are picking. And part of it is about math, right? They know, again, just thinking about who are the people that you can pick off. I was thinking about the fact that when Trump was impeached the second time, that there were 7 Republican senators, only 3 of whom remain in the Senate, that voted for his conviction, right? So let's just start with those people that may be offended enough by Pete Hegseth's conduct. And then, you're thinking, who else can you pick off? Is Joni Ernst someone that you can potentially bring, to our side to vote against him? It's possible, right? I don't know what's happening in some of those behind the scenes, closed door meetings. I don't know what's happening in those one-on-one conversations among senators, right? But it certainly feels like there is enough content there to go after him, to say, look, we get it. We're going to be with you on Marco Rubio, at least we're going to be with you on most of these nominees, or at least we're not going to stage a huge fight. But come on, you have to see that this is beyond the pale, not just in terms of his lack of qualifications, but in terms of, the policies that he has endorsed, in terms of, upsetting behavior, whether it's showing up to work at 6 a.m. drunk, those sorts of things. So I think there's just enough there that this is going to be one where, again, I don't know if his confirmation is actually in jeopardy. I don't know if any of these nominees have a true chance of not getting their nomination through. But if anyone is sort of top of the list, it's him and Tulsi Gabbard.
And Tulsi Gabbard. Rick, do the hairs stand up on the back of your neck when you hear Democrats say this is the fight we're picking?
Yeah, they have to rely, Democrats have to rely on Republicans here, right? And it's not that a Susan Collins or somebody like that will choose to side with the Democrats. Susan Collins and others who might be more skeptical of some of these nominees are going to do it on the merits of the nominee. They're going to read the FBI report. They're going to have been informed by the Q&As that they've done in person with them. They're going to talk to their advisors, many of whom are going to be former military officers, and form their own opinion. And they'll either walk the plank for Donald Trump or they won't. And it's really not a political construct for them. It's really whether or not these people have what it takes to serve. And by the way, one of the things that is included in that is having Donald Trump's confidence to be a good secretary of whatever agency they're in or director. And that is a meaningful thing. It doesn't do any good to put a cabinet secretary in an office serving Donald Trump, who Donald Trump doesn't like or doesn't have confidence in. And we saw how that played out in the first administration, and Republicans in the Senate are going to be sensitive to that in the second administration.
Boy, Republicans, Rick, are going to play a role in this hearing as well. I mean, it's going to be rah-rah Pete Hegseth on the other side of the aisle, right?
Yeah, there'll be people who will want to sort of distance themselves from the Democratic charges, and therefore it's kind of physics of confirmation, opposites and equal reaction. If Democrats go out with very heavy, hard attacks, it's likely Republicans will come out with very aggressive defenses. But that's as much about tone as it is about substance. And so I don't get the impression from all the Democrats I've talked to that there is a sort of witch hunt brewing, or that they want to make these things a spectacle, like some past confirmations like within the Supreme Court. And so we'll see just exactly what the Democratic approach is, and that will inform how Republicans react.
Be interesting to see how questions about his history with women and alcohol might be colored by the fact that his kids will probably be sitting right behind him. Rick Davis and Christy Setzer. A great panel. They're going to be back in our second hour with much more to talk about. We're going to welcome our global television audience to the conversation, as always. And, of course, Kayleigh Lyons will be with us as well. Former Congressman Patrick McHenry sits down with us here at the table, and our panel will be back with much more on this 8th of January, the Wednesday edition of the fastest show in politics. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Donald Trump makes his return to the Capitol. Welcome to the fastest show in politics as the president-elect arrives in Washington to attend the funeral of Jimmy Carter this week, but not before an important meeting on Capitol Hill between Donald Trump and Senate Republicans. I'm Joe Matthew alongside Kayleigh Lyons in Washington. We welcome you to the Wednesday edition of Balance of Power. Kayleigh, something else. This meeting could bring a lot of news on the congressional agenda, right? On sequencing, on confirmations, and maybe more.
Well, certainly confirmations are going to be in focus as hearings for Donald Trump's nominees for a second administration, at least a large number of them, will begin next week ahead of his inauguration on the 20th. But of course, after the inauguration, when they're trying to enact his legislative agenda, that's where we still have a pretty big question mark as to how exactly tactically the president-elect wants to pursue this. Does he want one big, beautiful, powerful bill as he has suggested? Or if he gets or rather Senate Republicans get his ear today and say, no, we'd like it to be two, is he going to decide maybe that's the better way forward?
The idea is to how quickly you can get some punch. Sworn into office, confirmations we're hearing potentially on day one, Marco Rubio and Elise Stefanik, and then how quickly can you get to the border and taxes? John Thune and Mike Johnson haven't agreed on this, but there's no real direction coming from the president-elect, so we're still talking about it.
Yeah, so we'll have to see what emerges. The meeting is set to take place this evening. Yeah. So we'll have to follow this story throughout the evening and, of course, tomorrow, just as we're always following the markets here on Bloomberg as the Trading Wednesday is underway. So let's get a check on that now with Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much indeed. We got a real chill on Wall Street today with the Dow, the S&P, NASDAQ very much in the red right here with the S&P down 12 right now, down 0.2%. Dow Industrials down 77, decline there of 0.2%. NASDAQ down 74, drop there of 0.4%. 10-year 4.68%, with the 2-year now at 4.27%. Gold little changed, up $6 the ounce, $26.55, up by about 0.2%. A retreat for crude with a 73 handle now, down 1.2%. And Bitcoin trading lower by 2.5%. Bitcoin at 94,062 on Bitcoin. Bottom line here, traders refraining from making riskier bets with the market set to close tomorrow on the eve of Friday's jobs report. Sources tell Bloomberg Constellation Energy is making an acquisition of Calpine in what would be one of the biggest ever deals in the power generation sector. Those sources say a deal could be announced in coming weeks. And also, BlackRock has told employees it is cutting roughly 1% of its workforce after it committed more than $25 billion for acquisitions last year to expand its reach in private market assets and data. Again, recapping, S&P now down by 0.1% for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. We're live here in Washington, and joining us in studio in just a few moments will be a very important guest, the former chair of the House Financial Services Committee, Patrick McHenry, will be with us. He, of course, has left the House of Representatives, no longer representing North Carolina, so he'll be weighing in on the business still ongoing there, and if he's happy to be on the other side. But before we get to that, Joe, we also have to talk about the multiple legal developments pertaining to the president-elect that have emerged today.
It's been busy. We have a sentencing set for Friday, right? We'll remind everybody of that. January 10th, this is the New York hush money case. Donald Trump is now asking for help here, wants the Supreme Court to intervene. And as soon as we started working on this story, we get another one now. There could be a major development in the potential release of at least some of Special Counsel Jack Smith's report, which we know Merrick Garland wanted to see released. Donald Trump was fighting that as well. So we want to get to this with June Grasso, the host, of course, of Bloomberg Law on Bloomberg Radio. She's with us from World Headquarters in New York. June, it's great to see you. Let's start with the sentencing on Friday. What's going to happen here?
Well, that's a good question. It depends on the Supreme Court, I suppose. Trump is making this unusual request, one of many unusual requests he's made to the Supreme Court, asking them to intervene in a state case before it's over. I mean, they don't usually have jurisdiction to do that. You have to wait until the state case is completed. So he wants them to intervene to stop the sentencing from going forward on Friday, saying that it will, different reasons, saying that it will harm the reputation of the presidency, that will be a stigma that will harm the way world leaders look at him, that he has so much work to do during the transition. But remember that the judge in the case, the trial judge, has said that he is not going to impose any kind of sentence at all. This is just going to be an unconditional discharge, but it will formally put on the record that Trump is a convicted felon, and that appears to be what he's trying to avoid, being the first convicted felon being sworn in to be president of the United States.
Well, and of course, it was this case, the only one that had a verdict of some kind because it was the only one that went to trial. The federal cases, of course, dropped because he is the president-elect. June, that's both the documents case down in Florida, which was struggling to find a path forward anyway, as well as the election subversion case here in Washington, D.C. And we learned today from the Department of Justice that despite yesterday's ruling from the judge in the documents case, Eileen Cannon, that blocked the release of special counsel Jack Smith's report, that they're still going to try to release, if not the classified documents part of it, the DOJ would like to see the election subversion material come forward.
Right. So by dividing it this way into the election subversion part of the special counsel's report and the classified documents part of the special counsel's report, they're avoiding the argument made by the co-defendants in the classified documents case that it would hurt them to have this revealed to the public. So, I mean, that might be a good argument, but now the Justice Department is saying, well, we're just going to release the first part of this report. And, you know, I can't think of any reason besides embarrassment to Donald Trump that that wouldn't be allowed to happen. But it's before the 11th Circuit, and that is a conservative circuit. They have overruled the trial judge Eileen Cannon a couple of times. So it's hard to say what they'll do. If everything went the way it should, I think that that part of the special counsel's report should be released, because the second part, I mean, when Trump takes office, you know that the Justice Department is never going to release the second part of the report, and most likely the charges against the co-defendants in the classified document case are going to go away. So this is the be-all and end-all decision here.
All right, June Grosso, host of Bloomberg Law, thank you so much for joining us. Of course, we'll be watching on Friday to see if that sentencing does indeed move forward unless the Supreme Court intervenes. But as we've mentioned, before Trump can get to his agenda on Friday, he has a lot to do here in Washington in the next few days. He will, of course, be attending former President Jimmy Carter's state funeral tomorrow. And ahead of that, this evening, he is expected to meet at the Capitol with Senate Republicans as lawmakers look for some clarity on what exactly the legislative path forward is he would like to pursue. There's a little bit of a difference between the Senate and the House here. And it's on the House that we'd like to focus with our next guest, the former chair of the House Financial Services Committee, someone who once held the Speaker's gavel for a brief period of time in 2023, is here with us now, former Congressman Patrick McHenry of North Carolina, here in our Washington, D.C. studio. Sir, nice to see you.
Great to be with you.
On the other side.
Yes, and nice to be in studio as well. Cheers.
Yeah, it's lovely to have you. As you are now on the outside looking in, anticipating what is about to happen, now that Republicans do have entire control of Washington, how easy is it actually going to be able to exercise that control when it comes to some of these big ticket items we're talking about? Tax reform, immigration reform, energy policy.
Big ticket items, major consequences, high stakes, narrow majorities. This is going to be a hell of a grind. That is the only way to describe it. We saw an opening day with a speaker's vote. We had 15 votes on for Speaker McCarthy's election. He got through it without help. You had a faction within the House think that they were playing with the same dynamics as 2 years ago, and Speaker Johnson had his card, which was the president-elect Donald Trump, saying that this is an imperative to elect the speaker. So we saw the dynamic shift and the power shift here in a significant way, that President Trump's power and popularity and the mechanics of good leadership in the House can lead to results. And so I think we're going to have I think you're going to get the big ticket items done. It's going to be the secondary issues that are going to be much, much harder. And we need to I think Republicans need to lower their expectations on being able to achieve that in a timely manner.
I'm struck by the singular experience that Mike Johnson is having right now. You're one of the only people in the world who knows what it's like to stand in that rostrum, look across the floor of the House of Representatives. We know that he's going to have an even smaller majority in this new Congress than he had before. But bring us back to that view. When you're in the rostrum and you're looking at that room in front of you and the Republican conference, we hear a lot about the five families. What did it look like to you? Did you see these factions spread out in front of you as you were trying to corral lawmakers?
I spent most of my career in the House focusing on the mechanics, the COO role, not the CEO role, not the chairman role, but the mechanics of the day-to-day and how do you deliver on this. So when I look out, I see the groups of people, how they're sitting, where they're sitting, their disposition, who are they talking to? Who is the person who's not supposed to be in that row talking to somebody in that row? Why are these two people that I know hate each other, have personally told me they cannot stand each other, but they're laughing and hugging about something? That's probably not good, right? It's a dangerous thing. So when you look out at the mechanics of this, and what you saw from a Speaker Boehner and a Speaker McCarthy in particular, is they knew the granular details of this stuff. And Speaker Ryan came in with a different view, and I would say that Speaker Johnson comes in with a different view. They're at the higher level of policy. The mechanics, they have not been steeped in. That's not their first order capacity. So they lead in a different way than those that understand the tactical day-to-day. And we're in an environment now where President Trump has this overarching, has this umbrella that enables policy to be made within those powers and within those contours if he is definitive and certain. We're in this situation now where, as a primary example, where if the president says he wants one reconciliation package, there'll be one reconciliation package. And if he says there are two, there will be two. And if he says maybe one, maybe two, you may get none. And so he has to be definitive in what he wants and his expectations, and then demand that congressional leaders perform to that. And uncertainty means nothing happens.
Okay, so when we look at, as Joe is alluding to, the many different factions here, the people you might find suspicious if they were sitting together, the Freedom Caucus, for example, which caused a lot of trouble for Speaker McCarthy. That's why you had to step in for a few weeks there to hold the gavel yourself. Are those the same people that you see as most likely to ultimately bow to what the former president, the president-elect, is going to want? Because they're the ones who are likely to push back on a debt ceiling increase, on the idea of tax cuts without at least somewhat offsetting spending cuts.
Well, they're the ones that are most outspoken and they're currently getting the most attention. But you have those that are on the moderate end of the Republican Party that are not getting attention. And they're the ones that will have significant sway over the contours of legislation as well. It is not just you mentioned the five families, and it is to say that you can neatly divide this Republican conference into five factions. They're more than that. I mean, it's a myriad of challenges the speaker faces, and you have one-off challenging individuals that, because of personality, because of their lack of understanding how the place works, may be problems on a weekly basis here. So it is far more complicated than the Freedom Caucus, though the Freedom Caucus is currently shown with the 9 votes that they withheld to Speaker Johnson, that they have the power to throw him out of the speakership. What they also submitted to is an understanding that President Trump would force them to submit. And so they gave that up on the first vote. They made their show, but they did not extract any additional pain or get anything in result for that, other than to show they do have the capacity to take the speaker out. So it's a complicated thing, complicated beast, but this is why this is why I love following this stuff. This is why, this is far more interesting than any other sporting competition.
Do you regret not being in there now?
There's a little FOMO, but it also is a little more liberating because I don't feel that weight and the pressure of that moment to perform. But it is absolutely fascinating. It's going to be a fascinating Congress to watch.
I can't imagine how you remember that period of time when you were holding the gavel. But I think the point that you're making here is that even after MAGA wins the election, House, Senate, White House, the power may in fact lie in the middle.
It does. And inevitably, outside of a reconciliation package, you need to have almost, with a reconciliation package, you'd have to have near unanimous Republican support. Yeah. That is complicated by
So why won't he say what he wants? Mike Johnson's begging for it. Just give us direction. To your point.
That has always been the beg of President Trump from legislative leaders. That is the first term, and is now in his second term. This is part of how he operates. And when people seek clarity, he may withhold that. Yeah. That may be a purposeful act, and I think on the most part it is. And in other regards, it may be the fact that he doesn't see, or his advisors don't see, the need for him to step in yet.
He has obviously a long list of things he would like to see accomplished, that he would like to see the U.S. turn into, including something you're very familiar with as it pertains to crypto. He wants the U.S. to be now the Bitcoin capital of the world. You obviously worked very hard on crypto legislation when you were chair of House Financial Services. You had to do so through bipartisan negotiations. That may be less mandatory now, if you will. Now that it will be full Republican control, how do you see the nature of any kind of market structure legislation, for example, that's going to move forward from here changing, and how will it affect not just the incoming SEC chair, Paul Atkins, but whoever takes Ross Benham's spot at the CFTC?
Well, so let's step back. What we got with our market structure legislation called FIT 21, which was first of its kind on crypto, giving it a regulatory definition of what is a digital asset and a regulator. And actually two regulators, because we're America and we do things in a more complicated way. But FIT 21 was the result of bipartisan negotiations in the House of Representatives without the help of a Senate banking chair. Now we have Tim Scott as Senate banking chair. That is a world of difference from Democratic Senator Sherrod Brown, and a pro-administration. And I was working in an adversarial administration, highly adversarial administration. And yet I had 1/3 of the Democratic Party join me, including the number 2 and number 3 House Democrat, former Speaker Pelosi, significant members, Jim Himes of Connecticut, serious legislators across the left of center ideology, joined with House Republicans, with an administration that did not want them to do that. So I think the opportunity for crypto legislating goes way up because the environment has shifted. And crypto has shown that they have capacity at the ballot box, and they're willing to help their friends and go after their enemies. That is real power in Washington. They've expressed it. And if they're here to stay and here to play, they can have massive results over this Congress and future Congresses.
Big change coming to the Fed. You going to get dinner with Michael Barr once he's on the loose?
No time will I have that. I think Michael Barr resigning as vice chair to the Fed is very good for our system of independent monetary policy and very good for the Federal Reserve. I think the likelihood that incoming President Trump would fire the head of regulation at the Fed it is, number one, warranted, and number two, likely to succeed in the courts. And so for Michael Barr to step aside is actually is a direct result of this election, number one, and number two, the direct result of his mismanagement of the new set of regulations and bank capital standards that he couldn't even see through before the election. So I think this is a welcome and good thing for the American economy, a welcome and a good thing for financial stability and banking in the United States, and very good for our global leadership as well. I think the Federal Reserve Board does a fine job of overseeing their full powers when the board is in charge. And when they silo this off and hand it off to one individual on the board, they make mistakes, or that person does not keep their eye on the ball, like Michael Barr did not keep his eye on the ball in March, with the March of 2023 with the regional banking crisis. So I think it's a welcome and good thing. And I wish him well as a member of the Board of Governors, and I'm grateful that he has gone as with those additional powers of being vice chair.
Yeah, talking about the supervisory role of the Fed here specifically, but you in that answer talked about the independent monetary policy setting role as well, and I wonder if you're confident about that independence in this incoming administration, when just yesterday Donald Trump was at Mar-a-Lago saying interest rates are far too high. Do you not think he's going to try to put some pressure here?
He always does, and he always will.
Is
and
that
every
appropriate?
president, well, every president has. Every president has. FDR tinkered with the gold supply during the Great Depression. LBJ physically assaulted the chair of the Federal Reserve. Right? So he's not doing that. Mean tweets, that does not make monetary policy. And the Board of Governors at the Federal Reserve have long terms as Congress designed so they can have this longer term view. And I think Jay Powell's done a fabulous job as chair of the Fed. I think he's done a fabulous job. He's reining in what got out of control in inflation, and they're hitting their marks. But this president will speak his mind publicly where other presidents privately complained. And that is a big distinction between now and what was then.
We spent a lot of time in our conversation. You've been very generous with your time, talking about pretty recent history. You spent 20 years doing this. I'm glad to see the bow tie is still here. But what's next for Patrick McHenry? This is going to be a massive life change for you.
It is. This is what I've done my whole adult life. Public policy, campaigns, and elections.
Yeah.
I still want to remain involved in these big debates on financial policy. I think it's important that America stay at the forefront of the world of finance and we remain competitive. I have a deep interest in digital asset and cryptocurrency policy and affecting outcomes. But financial inclusion and fintech are these other areas of opportunity that I think we need to expand on. So I'd like to stay involved in the public policy debate, but more meaningfully in the economic consequences of our economy and participating in that in a real way now.
And you'll stay in touch with us, I hope.
Absolutely. This is the best place to.
Your opinion is important to us.
Well, this is the best place to know what is happening day to day, moment to moment with the markets and here in Washington. So thank you all. Thanks for having me on.
High praise, sir. Thanks for being here.
Yeah, absolutely. Patrick McHenry, former Congressman, Republican, with us at the table here in Washington. We want to keep tabs on the markets, of course. We've been talking around them. Let's get to them with Charlie Pellet in New York. How's it going, Charlie?
Hi, thank you very much. And here's what's going on right now. Little change on the S&P 500 index. Seconds ago, it was trading higher, but right now we'll call it flat on the day at 59.06, where we stand on the S&P 500 index. The Dow down 17. That is a drop of just under 0.1%, while NASDAQ lower by 17, a decline now of about 0.1%. 10-year at 4.68%, the 2-year 4.28%. Gold up $6 the ounce. Spot gold at $26.54, up by 0.2%. West Texas Intermediate crude down 1.4%, $73.24 a barrel. And Bitcoin now down by 1.9%, 94,634 on Bitcoin. Stocks are little changed as traders refrain from making riskier bets. The market's set to close tomorrow on the eve of Friday's jobs report. Ally Financial is cutting jobs, ending mortgage originations, and considering strategic alternatives for its credit card business as borrowers have struggled to pay down costly debt. Again, recapping, S&P 500 index now lower by 2 points. Little change there. We've got the 10-year yielding 4.68%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Welcome back to Balance of Power on Bloomberg TV and radio. We just had a great conversation with the former chair of the House Financial Services Committee, Patrick McHenry, who was discussing something that is very relevant today, and that is the path forward on budget reconciliation. This is something Donald Trump is going to be talking about with Senate Republicans in Washington this evening. And I believe what former Congressman McHenry told us, Joe, was essentially as long as Trump is clear, that is what will happen.
Right.
As long as Donald Trump, which is kind of where he is now, is suggesting one bill, two bills, I'm down for anything. He said if he doesn't decide, that may be the one thing that makes sure nothing happens.
That's why Mike Johnson and John Thune want an answer.
Yeah.
And we're wondering if they get one today. Let's assemble our panel because they have feelings about this too. Rick Davis is with us, Republican strategist and partner at Stone Court Capital, Bloomberg Politics contributor, joined by Democratic strategist Christy Setzer, founder, New Heights Communications. Great to have you both with us here. Rick, how important is it for Donald Trump to be clear with John Thune, with Senate Republicans when they meet later on today? The clock is ticking here. If they want something out of the gate, they need to start writing legislation.
Yeah, it's obviously been in Donald Trump's interest to try and push the envelope on timing. You know, we just talked about getting some of his confirmed Senate secretaries in day one. Well, he wants to have the same kind of impact legislatively. He wants day one the Senate and the House to start stepping off on his agenda. And what's really interesting to me is the fact that the president-elect's White House selection for immigration, Stephen Miller, has come out publicly saying he sides with Thune and we ought to do immigration first and get the rest of the stuff done in a second reconciliation package later. So when you start seeing people around Donald Trump articulating a clear strategy on what they think ought to get done, and they're the ones advising Donald Trump, I think it leads you to a path that could likely be an outcome today, which is Donald Trump puts his hand on Majority Leader Thune's shoulder and says, you've got the ball, get this thing rolling. I want immigration, energy, and a few other things first. And we'll handle tax cuts and other fiscal issues later. If that happens, then everyone salutes and steps off. There'll be no more debate.
Okay, well, I'm guessing the only people saluting really, though, will be Republicans, Christy, not Democrats. And I do wonder the role, if any, you see them playing in here. By nature, reconciliation means that just the majorities can get this thing through. You don't need 60 votes in the Senate, for example. So do they have any leverage in this conversation? Is Chuck Schumer relevant to how John Thune pursues this?
Yeah, sure. We talked in the last segment about how Democrats right now are just going to try to control the things that they can, which include, one, sort of controlling the media narrative a little bit. Obviously, as this process is going on, you're certainly going to see members of Congress, members of the Senate headed to cable networks to talk about what they would like to see in this process. And then they're also going to have some control, some leverage about, small process things. What can they delay? What can they emphasize? That sort of thing. So it's not that I necessarily think that Democrats have too much of a preference of what gets addressed first, whether it's immigration and the border or, tax cuts, for example. But I do think, to the extent that, Rick was emphasizing how Donald Trump has been quick out of the gate with, naming potential cabinet nominees, with legislation, wanting a big, beautiful bill, et cetera. Sure, that shows that he is active, but it also shows not just your priorities, but your values. And I think that there is a lot of opportunity for Democrats right now to control the conversation about what are Donald Trump's values. We're going to talk about tax cuts. It's giving a huge benefit to people like Elon Musk and Jeff Bezos and Mark Zuckerberg, and not you, right? So that is the leverage that Democrats bring right now.
Boy, I can't imagine, guys, what people think listening to this conversation every day. Who's going to go first? Are there going to be one or two bills? My goodness, we've been talking about this for days, and you start wondering exactly why it matters, Rick. But with regard to the border, if this in fact did come down to two different swings at reconciliation and they want to get to the border first, could they not get some help from Democrats on that? Aren't there Democratic members in both chambers, frankly, but more so in the House, who would like to be associated with border security?
Sure. You saw a virtual stampede toward being more assertive on border security before the last election, because I think members of the Democratic Party started reading the surveys and realizing that this itself is much more than just border security. And Donald Trump has said openly he'd be willing to engage with Democrats on what to do about Dreamers and work requirements and expanding H-1B visas. And I mean, there's a lot to talk about on a bipartisan example. And we just saw a bipartisan bill come out of the United States Senate right before the election, parenthetically, that Donald Trump had killed. But there is appetite for a bipartisan deal. I would say the one thing that is probably going to get in the way of anything significant like that is deportations. There'll be things in this bill that Donald Trump's going to want to have to make and ease his path to massive deportations. And I can't imagine a scenario where Democrats would sign on to any bill that has that kind of punitive provisions in it. So, yeah, there are lots of good things to do on a bipartisan basis. Things have been done in that way in the Senate. Kudos to them. We'll see if Donald Trump picks up where that left off and takes it one step further.
So there may be some area for bipartisan cooperation on immigration, perhaps, Christy, but I also wonder about tax policy, because obviously there's going to be a massive tax reform debate, whether that is encompassing on this wider package or is indeed a separate reconciliation bill. When you think about issues that are likely to come up, like the SALT cap, for example, something Donald Trump will be discussing with SALT-relevant Republicans at Mar-a-Lago this week, that is something that Democrats, Chuck Schumer included, have long been pushing for, as it's typically blue states that are most affected by that. Are there going to be Democratic votes showing up for a tax package that includes that, or is able to maintain the tax cuts that were put into place for inclusive of middle-income families in 2017?
I do think that is an area on the SALT tax where they can peel off some Democrats, including Schumer and others. In general, though, that one provision does complicate an issue on which, generally speaking, there's unity for Democrats, and it is a really good issue for us in that, in terms of messaging. I mean, obviously, I mentioned earlier that just generally speaking, I don't believe that people voted to give a huge tax cut to, millionaires and billionaires. They voted because they thought that they themselves would benefit from those tax cuts. So there's certainly kind of opportunity for Democrats to explain what's going on with that and how it's going to play out. There's also a bit of an opportunity for an education campaign on how much this is all going to cost. It's going to add $4 trillion at least to the budget, to the deficit over the next 10 years. That's a problem. And how do we want to pay for it, right? So that's actually where we get into the meat of the conversation. We're going to see huge Republican divisions on how to pay for it, and where the kinds of ways that, for example, the House Freedom Caucus, those issues that they would like to entertain about how to pay for it include cuts to programs that are deeply popular, Medicaid, Medicare. And again, there's going to be real consequences to groups that actually just put Donald Trump back into office, among seniors, poor people, veterans, et cetera. So I do believe that they will be able to kind of pick off a few through, issues like the SALT tax. But for the most part, this is one where I think you're actually going to see a lot of Democratic unity.
It's going to be quite the patio at Mar-a-Lago this weekend, Rick. There are large groups of Republican lawmakers who are headed to Florida for a confab. Governors will be there Thursday night. Saturday, the salty Republicans, as we're calling them, will be there. The Freedom Caucus will be there. They all have their own interests and their own ideas. What will come from these meetings at Mar-a-Lago if nothing less than a congressional agenda?
Yeah, my guess is it's more, here's what we think we can accomplish rather than give us your ideas on what you want to do as members. It's usually the way it works with the White House. But I guess this is Mar-a-Lago, the winter White House, in about 2 weeks. So the reality is that I've been hearing Republicans, the salty Republicans, really minimizing the exposure on the SALT tax. Many of them have taken up this cue that, wow, if we could just get a marriage penalty provision in there that gets rid of that, that would be great. It's not very expensive. It gives us something to say that we won. I think if you have these kinds of attitudes going in, you're going to come out with some agreements that are going to put SALT revisions on the tax code. So the reality is, if they don't do all these things and the tax code doesn't get passed for some reason, then the salty Republicans have a huge victory. All those provisions that took away their SALT tax go back into effect. So the reality is they do have some leverage, but my guess is they will come out of Mar-a-Lago charged up. They'll be happy with what they hear from the incoming White House team, and that will start some of this momentum. As you can see, he's building momentum for early legislative successes, and I think it's a really good use of what is otherwise been really pretty dead time in a presidential transition.
How early, though, is early, Rick? If ultimately he does tell John Thune, look, get me that first earliest win and wait for taxes later, how late in the year do you anticipate that would be, that the tax package actually gets through in a second budget reconciliation bill?
Yeah, well, it depends upon, obviously, what else is coming up that needs funding. So, typically these reconciliation bills take on a life of their own when they're attached to fiscal measures, right? So budget funding for the government. September is always a dicey month. It will be shocking to me that we have regular order this year and that we will have all the appropriations bills done before the end of September and we can fully fund the government for the first time in a few decades. So that will be actually one moment in time where you're going to have to fund the government. It's a must-pass bill. You slap reconciliation in there, and you got a big fat tax cut, and you'll see a lot of Republicans cheering for that kind of effort, and a lot of Democrats really angry that they're going to miss an opportunity to vote on some good things in the budget because they've attached the tax cuts to it. So I would think that would be one of the first opportunities on a must-pass legislation that you'd see reconciliation number 2.
All right, Rick Davis, Stone Court Capital partner and Bloomberg Politics contributor, together today with Christy Setzer, founder of New Heights Communications and Democratic strategist. Thank you both so much for joining us. And what is a pretty packed hour? We, of course, had a conversation with the previous chairman of the House Financial Services Committee. We're going to talk to its current ranking member coming up, Maxine Waters.
And they probably will not agree on everything.
No.
Yes, indeed. The gentlelady from California will join us ahead. We've got our eyes on the wildfires out there in the Palisades. Kaylee, we'll talk about that as well. Her district bumps right up against the line where that has fallen between the Palisades and Santa Monica. So we're balancing politics and some real-life issues in California straight ahead on the fastest show in politics. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. A choppy trading session on Wall Street today. Stocks are now back in the green with the S&P 500 index up 6, up by about 0.1%. Dow Industrials up 36, also an advance of 0.1%, while NASDAQ higher by 6 points. Little change there, but back in the green. 10-year, 4.68%, with the 2-year, 4.28%. Spot gold right now at $26.57 the ounce, up by about 0.3%. Crude 73.31 a barrel, down 1.3%, and Bitcoin down 1.9%, 94,630 on Bitcoin. Sources tell Bloomberg Constellation Energy is nearing an acquisition of Calpine in what would be one of the biggest ever deals in the power generation sector. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you so much, and thank you for being with us here on the Wednesday edition of Balance of Power on Bloomberg TV and radio, and on YouTube, where you can find us always. Search Bloomberg Business News Live, and you'll find our live feed there running through the day. Alongside Kaylee Lyons, we turn our attention to what's happening right now in Southern California. Kaylee, the images have been just remarkable. We were just looking at some of the tape from last evening when the Getty Villa was just surrounded. It was engulfed. And we're seeing these wildfires get incredibly close to downtown Los Angeles. If you're with us on Bloomberg TV or on YouTube right now, this is the Palisades. That's adjacent to Santa Monica. Some incredibly beautiful homes and some rather famous and wealthy people live there, Kaylee, and it's getting ever closer to some very concentrated population centers.
Yeah, we know that the fires already have killed 2 people. More than 1,100 structures have been destroyed. Many homes just simply burned to the ground as people have, of course, rushed to evacuate to safety. All of this being intensified and spread by really powerful winds that are making it very difficult for firefighters to get this thing under control. So we wanted to get an update now and turn to David Baker, who's Bloomberg climate and energy reporter, coming to us from San Francisco today. As we look down south in your state, David, is there any indication that these are going to be able to be controlled anytime soon with winds like this?
It's going to be very difficult for firefighters to get a handle on these fires until the winds abate, and they have not really abated. The worst of them may be past us, but that is not 100% sure. This windstorm event is supposed to last into Thursday, maybe into Friday, and there's the possibility of another windstorm coming in early next week with no rain in between.
Give us a sense geographically, David, of where this is happening and how close it's getting to areas of LA that a lot of people know. I mean, the Palisades it's an area on a lot of tours. People know, obviously, the pier in Santa Monica. Where are you most concerned about?
Most concerned about Palisades, Malibu, which is downwind of the Palisades, and the fire is burning right towards there. They had a bad fire back in December that sort of presaged all of this. But I'm also very, very concerned about Pasadena. When you look to sort of the northeast of downtown LA, Pasadena has a major fire on its hands. We just got an update from CAL FIRE on the size of that one. It is now past 10,000 acres, and it is burning right into the edge of that city. It's a beautiful place if you've been there. It's nestled right up against the San Gabriel Mountains, but that's part of the problem here. These winds are racing down the mountains and just tearing through that area. We don't know what sparked that fire, but now that it is going, it is raging there, and I am very concerned about that spot.
Well, very concerning indeed, and obviously our thoughts are with everyone who are in these areas in which they may find themselves in danger. As we think about how ultimately these fires will be brought under control, it's not just whether or not the winds calm down, but of course water and other things that it will take to actually fight the flames. There has been a lot of criticism thrown out today, David, by the president-elect Donald Trump, by Elon Musk, for example, about decisions Gavin Newsom has made when it comes to water. Trump specifically saying that he refused to sign a water restoration declaration that would have allowed access to millions of gallons of water. Can you just walk us through the extent to which that is true, or if it's playing any real role in the attempts to fight these fires?
With these fires, when they erupt, the state throws pretty much every resource it has at them. In terms of access to water, I have not heard any on-the-ground reports about problems with getting access to water. Plus, the state does actually have and is using tankers that fly out over the ocean, scoop up water, and just dump it where it's needed. We know they were in use yesterday. We saw them flying off the coast of Santa Monica. So we know those are out there. And, with fires like this, once they get going, the big issue is how much water actually fell from the sky in the last 6 months before the fires started. Here in Southern California, you're seeing virtually no rain since early last spring. Whereas in Northern California, where I am, we've had atmospheric rivers and even a little bit of flooding. They've had nothing down there, and that's the big issue here.
Well, it's great to spend some time with you, David. I appreciate your joining us. Bloomberg climate and energy reporter David Baker with us from San Francisco. It's also a pleasure to add the voice of Maxine Waters, the Democratic Congresswoman from California's 43rd District, is with us at this precarious moment. Congresswoman, thank you so much for being here on Bloomberg TV and radio. This is basically happening in your backyard as, again, you represent the 43rd District with our eyes on Santa Monica. What do the people of your district or neighboring districts need most now? Can you hear us, Congresswoman? Not sure we're ready to talk to Maxine Waters yet, but we'll work on that so we can have that conversation. If you look at her district, Kaylee, if it's not already impacting her neighbors, it's awfully close.
Well, and especially with the winds that we were just talking about with David, how quickly this can be spread, considering how dry it has been, how powerful these winds are, and how we are talking about urban areas here.
Right,
Usually Maxine Waters' district would probably not find itself as susceptible to the risk of these fires as other areas of California, which unfortunately have experienced this repeatedly in recent years. But this is literally downtown Los Angeles we're talking about in some instances. And it's remarkable to consider that this is happening with the president, Joe Biden, in California. He was slated to be talking about climate-related issues in California yesterday, remarks that had to be rescheduled as they navigate what is turning into a very serious situation that has already taken 2 lives.
Yeah, and massive evacuations here. To give you a sense of the scale we're talking about, almost 3,000 acres uncontained here. There's a separate fire, about 400 acres in size, Kaylee, that's nearby. And I know that with the winds, there's a very real worry about them coming together at some point here. We're talking about 100-mile-an-hour wind gusts. The images that we were showing, which, by the way, that was live stuff that we're showing you from Southern California just now. Absolutely horrifying images with many people who are, of course, watching and listening impacted by this, and their neighbors, family members who have had to evacuate. We're talking about a massive swath from Pasadena all the way down to the Santa Monica Pier, up through the Palisades in Malibu. Kaylee, it's just absolutely remarkable.
Yeah, and of course, we're seeing resources deployed. David was talking us through some of the resources that are being tapped by the state of California, but obviously the federal government is involved here as well. The White House earlier this afternoon, in fact, just a moment ago, said the president has also directed the Department of Defense to provide additional firefighting personnel and capabilities, as well as 2 modular air firefighting system units being deployed, and Navy helicopters as well, as they try to fight these flames. Just speaks to the very urgent nature of the need to get this under control. And again, as I said a moment ago, this is unfortunately not something that we're not used to in the state of California and other parts of the country. Frankly, these wildfires have done a lot of damage in recent years and beyond.
We're standing by for a conversation with Congresswoman Maxine Waters, the Democrat from California, whose district is right in the zone that we are looking at here, is going to be on the line with us shortly. Kaylee, we have a lot of other things to talk about with the Congresswoman, as we did with Patrick McHenry. Really interesting conversation to hear from a former, in this case, at a difficult moment here in Washington, with the big questions about the congressional agenda going forward. We'll remind our audience, by the way, Donald Trump in Washington for a meeting later today, 6 p.m. Eastern is the plan right now with Senate Republicans. I suspect they will be talking about this, Kaylee, among other things, because you know this is going to likely result in a supplemental budget request, an emergency funding request of some sort. But we're talking about everything from border security to tax cuts in this meeting The president-elect is here, of course, for the funeral of Jimmy Carter that is scheduled for tomorrow.
Yeah, it certainly is a stacked week as we keep an eye on what is happening just with natural elements and then, of course, with domestic policy as we consider not just the future path of legislation like tax reform, but also other legislation that will come out of committees like the Financial Services Committee that Patrick McHenry used to lead when it comes to, for example, crypto legislation, something that might be a bit easier to get through with entire Republican control, and certainly the landscape for companies in that industry and others is going to change as there's a new SEC chair coming in as well. Presumably Paul Atkins will be confirmed, but the current SEC chair, the outgoing one, sat down for an exit interview with Bloomberg earlier
We've spent some time with Gary Gensler here on this program, and he spoke with David Gura today in his office, which is interesting. They're literally packing things up right now. And they covered a lot of ground. Of course, crypto was a big part of the conversation, and I'll be curious to hear the full interview on the Big Take podcast. But reflections on time spent working for the Biden administration. Let's listen.
It's a great privilege to be in a role like this. I'm the 33rd chair. It's a big country. A lot of people could do this job. So I start with it's just such a privilege to be here, and thank you to Joe Biden for asking me to do it. But what's remarkable about this role is it oversees the $120 trillion capital market, which touches everything in our economy, because you've got to raise money for most of what we do in our economy, and people save. So I feel terrific. You ask about the attacks and things like that. That's what public policy is about. You walk into this central square and you debate these important things for 330 million Americans. I've worked over the years with Hillary Clinton on a number of campaigns, and I remember Hillary saying once, like, if you're not willing to be attacked, you can't go into the public square and debate policy. And so I think it's part of our great democracy.
I look at who is inveighing against you and who's throwing that invective, and it's the president-elect, it's the world's richest man. Does it feel different to you than what you, I'm sure, experienced after the global financial crisis when you were at the CFTC? Has the atmosphere, has the environment changed for regulators like yourself?
Well, I think it does change. What we do here at this great agency is look out for everyday Americans, people just trying to save for a better future and try to move through things that help them, like we've done, like even shortening the settlement cycle from 2 days to 1 day. Might sound geeky behind the scenes, but it means you get your money 1 day faster, for instance, or getting privacy notices. There was no federal rule that you needed to get a notice if your data was hacked, and we put in place some rules to do that. So we're looking out for everyday Americans, trying to lower the cost of the markets to trade stocks, to trade bonds. But it doesn't surprise me that then there's some in the middle of the market. They're called brokers, they're called dealers, they're called intermediaries, stock exchanges, who they like their business model. And if we're changing the rules to benefit everyday Americans, they might have thoughts on that and object. And that's part of the process.
Good mood. He's sitting in the office with David Gura. But David brings us back, Kaylee, to a really important point that you can't avoid when it comes to Gary Gensler. This has been a very difficult tenure for him in the crypto space. You have a unique perspective on this, having covered crypto. You used to host the crypto show. You joined us here in Washington originally to cover the regulatory space, and you've had some pretty chippy interviews with Gary Gensler, and that's because you were doing your job. Did he deserve all the flack he got from the crypto space? What do they think of him now?
Oh, they're not going to look kindly upon him in hindsight. And it was interesting, in part of this interview with David Gura, he actually tried to kind of throw something back on his predecessor, Jay Clayton, that he started taking enforcement actions in crypto.
He made almost as many enforcement actions.
Is the one who rejected initial proposals for Bitcoin ETF.
Is that fair?
I think he's trying to make it seem like he's not the only potential bad guy that they can point out.
He was building on the work of Jay Clayton.
Well, that's I guess how he would describe it. But certainly the crypto industry specifically is probably very much looking forward to Paul Atkins coming in to take over the SEC, and it'll be interesting to see how Atkins pursues or dismantles some of the other areas in which Gary Gensler was very active in when it comes to reining in hedge fund disclosures and fees. Climate disclosure is going to be a really big question, so it's something we're going to have to continue to watch.
With the outgoing leader of the CFTC today, you wonder if its charge might be evolving under a Trump administration. All questions we'll be seeking to answer after the 20th of January. Alongside Kaylee Lyons, I'm Joe Matthew. Glad you could spend some time with us. We'll be back at 5 p.m. Eastern, the late edition of Balance of Power, with much more to follow.
Indeed, and Fed Minutes coming up in just 5 minutes, so they'll take you through that on Bloomberg Business Week, just ahead on Bloomberg.
This is Bloomberg Business Week, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser. and Tim Stenivek on Bloomberg Radio and Television.
And a very good afternoon, everybody. Live on television, radio, YouTube, Bloomberg Originals. This is Bloomberg Business Week. I'm Carol Master along with Tim Stenivek on what we're kind of calling a Fed Wednesday, but it's really an FOMC Wednesday because we get minutes in just a moment.
Yeah, they're going to be crossing the Bloomberg terminal any minute now. We're going to get the latest intel on Fed policy. This is the U.S. Central Bank releases the minutes from its latest meeting, its last meeting of 2024.
Yep, we're going to be reading the tea leaves, trying to get more clues on what we might get in terms of rate moves come 2025 this year. Because as you know, based on some of the economic data, the expectations have been changing. Let's head to D.C. Bloomberg News International Economics and Policy Correspondent Michael McKee is at the Fed. Mike, walk us through the minutes.
Well, Carol, there are some hints in the minutes of what might come in the future. The president-elect isn't mentioned by name, but the minutes show Fed officials spent a lot of time discussing the possible impacts of his potential fiscal policies. Quote, almost all participants judged that the upside risks to the inflation outlook had increased, the minutes say. They cited recent stronger than expected readings on inflation and the likely effects of potential changes in trade and immigration policy, a phrase that appears several times in the minutes. With growth also stronger than had been forecast and the labor market showing no signs of, quote, rapidly deteriorating, a substantial majority of the central bankers felt it was time to move to a more cautious policy regime. At the current juncture, the minutes say, with its policy stance still meaningfully restrictive, the committee was well positioned to take time to assess the evolving outlook for economic activity and inflation. Participants indicated the committee was at or near the point at which it would be appropriate to slow the pace of policy easing. The minutes confirmed some of the 19 officials incorporated what they called placeholder assumptions to one degree or another about the effect of possible Trump policies. Others did not. A few didn't say. A majority of participants noted their judgment about the meeting's policy decision had been finely balanced. More than one said there was merit in keeping the target rate unchanged. Cleveland Fed President Beth Hammack, who dissented at the decision to cut, is the only one who was identified. So the minutes do lay out the possibility of a slower for longer path forward for the Fed.
Mike, I want to come back to you in just a moment because I'm curious to see what you think stands out based on our thinkings about the Fed and what they're going to do in 2025. Having said that, I do want to do a quick check on the markets because pretty much no reaction, very little reaction, I should say, in terms of the equity trade. The S&P was down about 9 points heading into the FOMC minutes, now down about 11. The NASDAQ 100, we saw a decline of about 38 points ahead of that decision, now with a decline of about 48. More importantly, the Treasury curve, let's go there. The 10-year was yielding about 470. That's exactly where we're seeing it. Let's go to the shorter end, which is so sensitive, of course, to Fed policy and conversations and narratives. That 2-year note was yielding about 4.28. That's exactly where we see it. So not too much reaction. Mike McKee, you parse through, you actually read all these documents, go through it word by word. What jumps out for you in terms of what we've been thinking about, less Fed moves this year? Is there anything in there that gives you some more clarity?
I'm not sure if it gives us a whole lot more clarity, but it reinforces the idea that the Fed is now going to slow down. We don't know exactly what that means for January, but the bet would be they're not going to cut rates. They'll hold at that meeting because the discussion of potential changes to trade and immigration policies comes up over and over again. It comes up in the staff forecast for what they think is going to happen. The staff slightly nudging up its inflation forecast for the coming year and citing some of this uncertainty about future policies. So one has to walk away from this saying the Fed has basically told us what they were thinking at the time of the last meeting is the same as they're thinking today. We don't know what's going to happen. Inflation pressures are still relatively strong, so we are setting the stage for not moving right away.
Inflation in the labor market certainly linked. We got a little bit of data today with the ADP jobs report. We're going to get the change in non-farm payrolls on Friday for the month of December. Analysts surveyed by Bloomberg say 165,000 to the upside. Mike, how does what you learned today change the picture or inform the picture about the labor market moving forward?
Well, there's a little bit more emphasis on the labor market in the minutes than a lot of people maybe had taken away from the last meeting and what we've heard from Fed officials since then. While they do say, as the minutes note, that there's not a sign of substantial deterioration, there are some signs that the labor market might be weakening a little bit. And the minutes say members agreed that it bears close watching. So they will pay attention to what happens. But it's inflation that gets top billing throughout the minutes, as it has in most of the members' speeches since then. And so we're really going to be watching next week to see what happens with CPI and PPI. And of course, towards the end of the month, when we get the PCE numbers, because inflation seems to be the lodestar for the Fed right now.
Hey, Mike, we did have Federal Reserve Governor Chris Waller coming out, a permanent voting member, and he said he believes inflation will continue to cool toward the central bank's 2% target, prompting some support for additional interest rate cuts this year. How important is Waller's voice?
Waller is seen as one of the intellectual centers of the Fed, and he is an important voice. He's basically said today that his view is sort of the central view among members of the Fed, that they do expect inflation to continue to cool, but he noted at a slower pace. And it still means that they can cut rates, but he didn't put any kind of time frame or amount on that. So that didn't represent really much of a change. The news in his speech today, perhaps, was that he was looking at the possible Trump policies and saying he didn't think at least the trade policies were going to be necessarily inflationary, because with trade and you get higher tariffs, you don't necessarily get higher inflation, because it's a one-time move up in the price level, unless you have tariffs that are spread out over time or very large that could have an impact on inflation. And we don't know, and Waller said that today, we don't know what Donald Trump is actually going to do. So based on past history, it may not be inflationary, but you still have to watch and wait. The markets have obviously not reacted to the minutes, but pre-acted. We've seen rates go up as investors have kind of bet this is what the Fed was thinking.
Hey, Mike, a story continuing with Fed leadership and the composition of the Federal Reserve under the next administration, a story that got a read spike on the Bloomberg terminal. President-elect Donald Trump's advisors considering how they will reshape the leadership of the Federal Reserve, including elevating Fed Governor Michelle Bowman to be the bank's next vice chair for supervision. That's according to people familiar with the matter. Should we expect a very different Fed in terms of composition, in terms of policy, as a result of a Trump White House, or does the Fed remain independent, as it says in its mandate?
You're not going to see a whole lot of difference in the near term. There are no openings on the Fed until January of next year, when Adriana Kugler's term runs out. So Donald Trump can't change anybody who is on the Fed unless someone else resigns in the meantime. Michelle Bowman is a candidate to become the vice chair for supervision because she's a banking representative, has served as a banking commissioner back in Kansas, has a background in it, and has been deeply involved in some of the regulatory issues that the Fed has followed. But the president could also decide to leave that post vacant for now. Once Jay Powell resigns, or his term is up, rather, as Fed chair in May of next year, that's when you might see a difference be made, depending on who President Trump would nominate to be chair.
All right, Mike, so you get back home, you're in the newsroom, Tim and I are like bothering you about like what we should be watching. I mean, obviously we've got the Friday jobs report. I'm just curious, so now that we've got through these Fed minutes, how are you thinking about what you mentioned the inflation report next week, also later this month. A lot of data before we get to the first Fed meeting of this year, and certainly before we get to the second meeting in March. So I don't know, how are you thinking about where the Fed is right now?
Well, I think the Fed is kind of on hold at the moment, waiting to see, like the rest of us, what's going to happen. Obviously, we're going to pay attention to the inflation numbers next week. And then immediately, Donald Trump says on day one, maybe day two, he's going to start announcing all of these policies that he's talked about. The market will have to digest those and figure out what it means for the economy. But they're already at this point sort of pricing in the idea that the Fed is on hold for now and may not cut a whole lot in 2025 because these policies could be inflationary.
All right, great stuff as always. Safe travels, kiddo. Bloomberg News international economics and policy correspondent Michael McKee outside the Fed with the breakdown on the Fed minutes. Now let's get to another read on the U.S. economy. And Tim, this one's from the C-suite.
Delta Airlines reports earnings this week on Friday. Ahead of that, Delta CEO Ed Bastian is at CES out there in Las Vegas after giving a first-ever keynote at the Las Vegas Sphere, talking about, Carol, how AI will upgrade the airline experience and more.
Right now, he's sitting down with our own Ed Ludlow, co-host of Bloomberg Technology. He is out there at CES in Vegas. Ed, take it away.
Thank
Hey guys, well, two Eds are better than one, as they say. And when it comes to Ed Bastian in his keynote at the Sphere, several CEOs came up to me and said that he set the bar so impossibly high on this presentation inside of that technology-forward venue. But Delta is thinking about real technology for customers in how they get to and from and inside the airplane. Ed, we have a lot to discuss.
Yeah, absolutely.
I want to talk about what you guys call multimodal transport. I'm going to set a baseline and say skeptical because I've been talking to Joby, eVTOL company, for a flying taxi company for a long time. I'm yet to see it.
Yep.
But on the Uber deal, very interesting. So basically, a partnership where you got a Delta flight, you have an incentive to take an Uber to the airport. Sounds like a very good deal for Uber.
Yeah.
What about you?
Oh, it's a great deal for us too. First of all, thank you for having me. Dara and I have been talking about this for a while. 15% of all Uber rides are either to or from airports. So the financial incentive, as you say, for Uber to work exclusively with a large airline like Delta is important. But also as we continue to improve both of our premium experiences. So a lot of the focus is going to be going on the upscale opportunities and Lyft, where Delta excels at. And I think Uber wants to work with us to learn about that. And then in turn, members of the Delta loyalty program and the Uber loyalty program drive incredible signups. And we've seen that with other great brands like Starbucks, for example. We blew the lid off the loyalty programs of both companies when we announced that a couple of years back. I think Uber, you're going to see a similar type of trend where people are going to pile in and say, I want to be part of the ecosystem you're building.
For those less familiar, Joby is a company that makes flying taxis, eVTOL, but they also want to operate a service. Loads of people will be watching and listening in New York City and also in Los Angeles, and our thoughts go to those in Los Angeles impacted by what's happening with the fires. The concept is that rather than take a very long car journey to the airport in high-density traffic, you take a hop on an eVTOL, you get off, and you get on, in your case, a Delta flight. It seems so far away still, Ed.
Well, we're talking about the next century of flight. So our theme is Delta's turning 100 years old this year. And we spent a little bit of time reminiscing about what the first 100 years of flight was. And when you think about where we were this time 100 years ago, where just the flight was just launching, to where we could end up 100 years from now, there's a tremendous amount of opportunity. So yes, in the immediate term, it's going to take some time. It could be 3 years, 5 years, 7 years before these things start to gain some scale. But we're already in the game with Joby. We're an investor, as is Uber, in the product. We expect in the next couple of years, you'll start to see it in the skies, both in New York and LA. FAA and the regulatory agencies have been very supportive.
Yes, they have.
Of building the framework for the certification of the product. And we know there's great value proposition. Every time you're stuck, whether it's going out on a 1.5-hour car ride between Manhattan and JFK, and sometimes even to LaGuardia, or the same thing in LA. Delta is the #1 airline in both New York as well as in LA. We've got the infrastructure in place to be able to bring that in. Again, it's going to be a premium experience, which we specialize in. So I'm excited about where it's going. It's going to take longer than people would want it to take, but it's coming.
That's often the case at CES.
That's coming.
Those kinds of things.
But this is coming.
You have conviction.
This is not a question of if, it's just a question of how long it's going to take through the learning journey.
And that's why I'll check in with you every year until it happens.
Yeah, absolutely.
We have Delta's AI story, or an early version of it, Delta Concierge. You know, I'm someone that flies a lot. I rely heavily on an interaction with an app. Yeah. Within the app is a chatbot. It's automated, driven by AI. But often my frustration is I don't get the answer I want. I need a human. Is Delta Concierge going to work? And actually, does it drive new customers to Delta? How do they hear about it?
Well, first of all, we are operating at scale today. We have 200 million customers on an annual basis that we serve. We know so much about our customers. We have so much insight from them that we're working with companies like Qualtrics on the experience management front, or opportunities to continue to take and create greater ability to serve up the customers how they can get better control over the travel journey. You know, so much of the apps today are helpful, but when you really need them, as you say, it's sometimes hard to get through a lot of the barriers in terms of true self-service. So this is going to take self-service to a new level where through voice, through experience management, through personalized journey, and our ability to build our technology personalized connection to that customer. And it's not just going to be about how do we get to a different flight if I've had a cancellation, or how do I move my seat, or how do I look at my schedule. It's going to be, what do you want to do when you're there, and people that kind of come into our ecosystem. Potentially, do you want to take a Joby versus having to take an Uber? Do you want to have an opportunity to learn about what we are doing along the journey? All of that's going to be in a concierge model. And we just think about historically who concierge have been. They've been all-encompassing, there to serve, and that's what we can do with Gen AI.
Are you looking at AI for pricing, real-time pricing?
We are.
When does that happen?
We're already experimenting with it.
The number one question I get for you every time, Starlink. And they look at your competitors and their pivots. Starlink, they want to see it in Delta.
Yeah. Well, we were with Starlink well before any of the other airlines.
I mean deployment and rollout.
In terms of exploring the opportunity, we worked with SpaceX for quite a few years. We weren't able to we were ready to go before they were. And so that's why we moved with Viasat. Viasat is already up and running. And all of the announcements you've seen around Starlink largely, and certainly there's some airlines, some of the small airlines like Hawaiian, maybe up and running now, but everybody else is still just starting on the journey. We're done with the journey. We're going to be finishing out the international rollout this year. And there'll be opportunities. If there's better technology to come, we can learn then. But it wasn't ready for us. We were ahead of the game, and we're going to stay ahead of the game.
Ed, final question. You put a lot of work and money into cloud migration, AWS, but the big story was CrowdStrike. I want to ask simply what the learning and lesson was there and the net result of what happened there.
Well, CrowdStrike is a situation where you pay top dollar to have what you believe to be the best-in-class defender of your surface, technology surface. And unfortunately, they failed us. And so that will be litigated in the courts, and there will be some resolution achieved sometime. It may take a year or two. We'll see what happens. What we learned is that you can never allow the technology provider to have access into your internal core without your ability to ensure either they got the proper controls in place or you have the controls over them. And unfortunately, that was the case. And by the way, it wasn't just the case in Delta. It was the case with hundreds of thousands of companies around the world.
Ed Bastian, Delta CEO, I really appreciate your time here at CES 2025. Tim, Carol, back to you guys in New York City.
All right, so appreciated. Our own Ed Ludlow there at CES in Vegas. Of course, he is the co-host of Bloomberg Technology with the CEO of Delta Airlines, Ed Bastian. Shares of Delta, by the way, just up about 0.4% here, but some interesting things in terms of what they are doing, specifically with Uber, replacing Lyft as their rideshare partner, but also AI and the use of artificial intelligence. Ed Bastian talking about that lot from the Sphere, I should say, in Vegas. So interesting.
Yeah, and I think as our own Ed Ludlow pointed out, a big opportunity for AI is customer service. And when you get to the point where you don't have to talk to a human being anymore to actually fix your problem, you can do that through a smart chatbot, some sort of assistant. We'll see when that happens.
I feel like we're doing more and more, though.
Yeah, we're still here.
With
you
the
and I are still
assistants.
here.
We are still here, and we are going to get to a really serious situation out on the West Coast, Southern California. Residents there fleeing those wildfires that are expected to continue for a few more days. An update when we come back right here on Business Week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. It has been a choppy session, but right now we have got the Dow, the S&P, NASDAQ. They're all advancing. S&P up 9, little changed, up by about 0.1%. Dow Jones Industrial Average also higher, up 61 now. That is a gain of 0.1%. The NASDAQ Composite Index up 8, up less than 0.1%. The 10-year at 4.68%, with a 2-year at 4.27%. Spot gold up $11 the ounce, up 0.4%. West Texas Intermediate crude down 1.1%, 73.46 a barrel. And Bitcoin now down 2%, 94,520 on Bitcoin. Shares in some of Europe's biggest wind power companies are lower after President-elect Donald Trump said he aimed to have no new windmills in the U.S. after taking office. Among some of those wind companies, Vestas in Copenhagen trading lower now by 7.4%, and Ørsted shares down by 5.8%. Recapping, the S&P 500 index up 7, a gain of 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here in our New York studio here at Bloomberg headquarters. We are really focused, though, a lot of what is going on the West Coast. And right now, President Biden is at a Santa Monica fire station with California Governor Gavin Newsom being briefed on what is the most destructive windstorm to strike the LA area in 14 years. And that is really fanning wildfires and has sent thousands of residents fleeing for their lives, with dangerous gusts expected to persist for at least another 2 days. Tim, we know already 2 are dead as a result of these fires.
With the latest, we turn to Bloomberg News energy and climate reporter David Baker, who has been following the story for us. He joins us from Northern California in the Bloomberg San Francisco Bureau. You heard it from Carol just now, 2 dead, a high number of significant injuries from the fires. Firefighters continue to struggle to contain blazes in Pacific Palisades and Pasadena as well. What can you tell us about the conditions over the next couple of days and the current conditions, David, that are creating an instance such as this that is just so perfect for these fires to rage on?
These conditions are indeed very bad, very dangerous. The winds are powerful. The just regular winds are powerful, but the gusts are even stronger, and they're going to continue at least through Thursday. We may have a respite over the weekend, but there's the possibility of another windstorm settling in on Monday or Tuesday of next week, with no rain in between here and there. So essentially for the firefighters, what they are trying to do is steer the flames away from homes and away from infrastructure as best they can. But with conditions like this, there's only so much they're going to be able to do.
Tell us about the ground. So much when we are often talking about wildfires, be it on the West Coast or nearby vicinity. You know, David, we're also talking about what makes it more difficult is that the ground has been so dry. Was that the case in these fires?
Yeah, the problem here is that the biggest problem here is that Southern California has had virtually no rain since spring. They haven't had even a half inch of rain recorded in downtown LA since April. And so as a result, all of the vegetation in the hills surrounding the city is bone dry, ready to burn. And when you have an event like this, these winds blow from basically the deserts out to the coast. They dry things out even further, and they're a little bit warm as well. So the conditions become perfect for spreading fires. So for the firefighters, they're trying to douse things along the edges of the blazes. But you've got to understand that all these bushes are just bone dry and ready to go.
David, I'm wondering about structural damage at this point. It's one thing for a fire such as this to rage in an area where people do not live, as often does happen during fire season. We know that. But what do we know about how much damage has been done in the greater Los Angeles area and what firefighters have or have not been able to do to protect structures?
We don't know too precise details yet about how many things have burned. We do know that the number of homes that are in danger are well into the thousands. And we even had, for a little while this morning, a fire erupt kind of close to the center of the San Fernando Valley, which is a big, heavily populated area. There was a small fire that got going in a grassy area there, and the firefighters were able to get on top of it. But we're talking about many thousands of homes, quite probably, that are in harm's way. And we're also talking about thousands of people who have been evacuated. The last count that my team was able to rough together was something north of 100,000 people, probably more than 125,000. And they're all on the move. It's like a small American city, all being forced to flee for their lives.
David, one of the other aspects of this in a big way is what the utilities are up to or what they are doing to maybe help prevent even further fires. I'm looking at some of the players that serve Southern California. Edison International is down about 13% as we speak. Sempra Energy, which owns San Diego Gas and Electric, has been down as much as 3.5%, still down about 3%. They, from what we understand, I'm looking at our live blog, have started to shut power off in some communities. What are we hearing about utilities and their efforts to maybe help rein this in or at least control it from further spread?
So the utilities could see this windstorm coming. They have their own meteorologists, and they focus very intently on this kind of thing this time of year. And they put in place plans to shut off power proactively to areas that could be very prone to burning. We have a long history in California of deadly wildfires that have been sparked by power lines either falling down in high winds or getting tangled with tree limbs in high winds. And so the utilities have become very cautious about this and will shut down power when one of these storms approaches. They started to do that yesterday, and in fact, they're still doing it right now. There are fears among investors that a couple of these fires, maybe all these fires, are in some way tied to power lines, but that has not at all been proven yet, and I haven't heard anybody in authority even suggest it yet.
David, as I'm a Californian and I grew up with fires. It was just a fact of life, and the idea that you'd find ash raining down at certain points throughout the year. It was kind of a normal thing. Indeed, they've become more frequent and more devastating since I have lived there. But I always wonder about building and rebuilding in these areas that are at such high risk. We've seen insurance companies push back, drop coverage in some of these areas. But is this going to be the final straw in some of these areas, or do you think people will rebuild?
It's easy to say we shouldn't build in these places, right? It's like telling people on the East Coast, you shouldn't build right down by the beach because sooner or later a storm's going to come and smash that house to pieces. It's very simple to say that. It's very hard to do in practice. People always want to rebuild their homes. They always want to go back home. They have a powerful instinct to do that. And a lot of the folks being burned out of the Pacific Palisades right now, these are not poor people. Many of them will try to rebuild. The insurance issue, however, we have not figured out a way to resolve that yet. And I don't know how these homes will get insured if they do get rebuilt.
One thing I wanted to ask you, and this was certainly some of the footage we saw earlier today of as residents in the area were fleeing their homes, some of them were abandoning their cars, and it made it very tough for emergency vehicles to get to where they needed to be to fight this fire. Any update on what we're hearing about that? My understanding is that various equipment was coming through and just clearing the roads of these cars.
Yes. There were essentially bulldozers going through some places, pushing cars to the side and shoving them together. I saw some footage from one of the local TV stations last night where you had some lovely vehicles that were just basically crushed together because the firefighters had to get through there. I understand why people felt the need to flee the way they did, but this is what firefighters have had to do in response.
Yeah. No doubt about it. All right, listen, we really appreciate the update. David Baker, Bloomberg News energy and climate reporter, joining us from our bureau in San Francisco. We are going to stay out west, though, to a lighter story, no doubt about that. We're going to head back to CES in Las Vegas and to some of those companies in the tech and media worlds, changing how we consume and how we access content. And among them, Tim, is QuickPlay, which provides cloud solutions and platforms and services for OTT content delivery and more.
Here to tell us what they're up to is the CEO of QuickPlay, Paul Pastor, who has held executive positions at media organizations, including Disney Plus and Hulu. Paul joins us live at CES in Las Vegas. Paul, great to have you with us. We're going to talk about what you do with regard to the OTT space, the over-the-top space over at QuickPlay in just a minute. But before that, would love your news on the consolidation news that we saw. Would love your views on the consolidation news that we saw a little earlier this week when it comes to the tie-up of Hulu Live and of Fubo TV. Curious about what were your reaction to that as a former executive at Disney, somebody who worked at Hulu as well. What do you see as the strategy here?
Sure. Well, first, thank you so much for having me. And second, I know your last story was covering the fires in Los Angeles. As a prior Los Angelino and somebody in the media industry, my heart goes out to everybody and hope everybody's safe. Yeah. As it relates to the Fubo and Disney announcement, obviously this week, listen, the one thing we need to know and understand is this solved a very big problem for media companies. The Fubo lawsuit obviously was trying to ensure that media companies weren't able to bundle. And that would have devastating effects on these bigger media companies that still make a lot of money from cable. So for $220 million plus the combination of this venture with both Hulu Plus and Fubo, they've really solved a lot of problems both in the lawsuit and in driving scale in the industry, which will hopefully let them kind of build out new consumer propositions.
Paul, do you also think that decision by Disney to merge with Fubo and also launch its ESPN streaming product is kind of enough to, I guess you would say, future-proof its revenue from accelerated cord cutting, which we know continues?
Well, listen, there's still a long-term trend that where we're seeing a decline in the total reach of cable. But this most certainly lets them launch the new venue opportunity where there is a strong value proposition behind sports and finding a level of aggregation that will really solve a consumer challenge of where do I find my sports and how do I watch them. So this is a win for consumers in that this product will begin to be launched, and hopefully we'll also find a path for these media companies to continue to address some of the reach concerns they have over the loss of cable subscriptions.
Yeah, so let's go there and give us an understanding of how you think they navigate this tricky terrain here. I mean, the cord cutting that we've seen over the last 15 years or so has just absolutely devastated the traditional pay TV providers and even those cable companies that have been carrying that content. These companies, apart from Netflix, are really trying to figure out what to do. What happens to the smaller content players now, the Warner Brothers Discoveries, the Paramounts, and the like, in an environment such as this?
Yeah, listen, I think every CEO and every person in a media company today is trying to figure out how do they future-proof their business. And what we can see and what we can tell, right, from all Gen Z consumption is that Gen Z consumers are going to YouTube and going to TikTok. They're watching a ton of short-form content. They spend 3 hours a day on YouTube and TikTok compared to 1 hour a day with broadcast and streamers. And this is a growing trend among all demographics. So personally, where I believe these media companies need to be focused is how do I begin to own the whole conversation around my IP and my content and think about developing a short form content and product strategy that really addresses these Gen Z consumers, the way that they like to interact with content, the way they consume it in these moments versus lean back experiences, the way they like to engage. I think that's the real opportunity for media companies today if they really want to think about their future and not ceding it to these other platforms.
So should Netflix be concerned because they don't necessarily have that short form content that TikTok has, that YouTube Shorts, that Instagram Reels has?
I certainly believe so. And if you would follow my LinkedIn post this last couple of weeks, you'll actually know I was challenging Netflix largely because of Beyonce Bowl. I'm a huge Beyonce fan, Cowboy Carter fan. I was super excited for having Netflix having the Christmas NFL. You too? See, you love it, right? Well, you go and watch the game, right? They made a huge push for people to watch this NFL game on Christmas Day. I personally, all I really cared about was watching the halftime show with Beyonce. 10 minutes after the broadcast, it was nowhere to be found. No one had thought about the fact that they needed to actually clip it immediately and post it and make it available for their consumers. Instead, I watched it on YouTube, right? Wow. So it created a huge opportunity for YouTube to monetize a huge event when Netflix didn't own the conversation. And if they had other tools and a product focused on shorts, they could have really owned the entire conversation, right? So it's not just about Beyonce, it's the behind the scenes, and most importantly, all the social engagement that happens around it. So I think that's a real opportunity for Netflix and all the streamers out there to be thinking about owning the conversation and making sure they're not just focused on long form, they need to have a short form content experience that's social-like.
All right, one last question about the broader industry, and then we want to talk about your company. We mentioned about Disney and Fubo doing their deal. I just want to get your thoughts, because you understand this space, you worked at Disney. What skill set do you think that the Disney board is likely to prioritize in searching for its next leader?
Oh my goodness. Well, if I had that level of insight.
Well, what do you think?
Years, I could have
But what do you
placed a
think?
couple of different bets.
What do you think? It's like this iconic media company. It's got great properties, and yet it's trying to figure out, what its world is for the rest of the 21st century and maybe beyond.
Most certainly. Well, I think at the very end of the day, listen, I think you need somebody who has a vision of what 2030 looks like and 2035 looks like from a consumer standpoint, and how technology is going to fundamentally change both the creative side of the industry and the distribution side of the industry. It is incredible when we look at the tools that are becoming available to everyday users. When you look at the AI technology that can take text and turn it into a video format, and we're in version 1 and version 2 of that, imagine what that looks like in 5 years. That blending and that differentiation between premium content and UGC-driven content is eroding very rapidly. And so you need to figure out ways to harness it, and you need a CEO that embraces that type of vision.
All right, so let's talk about your world. Tell us about, your company. We did a little introduction. It sounds like you guys are at this great cross-section when it comes to content, and not just traditional providers, but, it's health, it's security, it's a lot of stuff going on. Tell us about your world. What is it that moves the financial needle? Where's the growth?
Certainly. So listen, this has been we started the company 5 years ago, back in the early days of COVID. But we recognized that this was a moment where media companies were beginning to focus on consumers and streamers, right? And they built out their version 1 of their platform. We're a technology company focused on tier 1 media who's looking to build out streaming solutions that also can advance the overall consumer experience. So what you've seen is we support the likes of Yankee Sports Network, Madison Square Garden, their joint venture. We support Allen Media Group, in delivering that overall consumer experience. What we're advancing in our conversation here at CES is how do we begin to really think about leveraging first AI tools to help companies develop shorts content, to leverage AI tools that can take live and VOD content, convert it into shorts, and then verticalize that to publish that into a syndicated or owned app experience. And second, to help them advance that social-like experience we were just talking about. That how do you build a destination where you can have an infinite scroll, interact with the content with likes, comments, emojis, to be able to share that into other platforms so the basis of the conversation starts on its own platform. Those are the types of experiences we're hoping to advance within the media industry and really help shape the opportunity for these streamers around new ad units, around driving promotion around their long-form engagement, driving promotion around their subscriptions, and fundamentally creating this virtual cycle of consumers leveraging or using their app on a daily basis, which really becomes the foundation for gaining mindshare and time spent with consumers.
So it sounds like you're making a bet that these companies that are your clients can actually build the audience within apps and then get consumers and get viewers and audience to engage there, and not just on the TikToks, the Instagrams, and the YouTubes. Is that correct? Because that seems like a really tall task.
That's right. Well, if you think about the IP that they have, so I'm saying, why don't you start with a destination that's built around your IP, right? And own the conversation. This is a very traditional way of looking at media in some respects. We've always had windowing strategies where content would start on one platform, then migrate to another, then migrate to another. Today, you could take content from live, premieres, from VOD, where you can say, this is exclusive to our platform. We're going to hold it for a window. Maybe it's 15 minutes. Start the conversation on my platform. Then I'll allow for it to be shared onto other platforms. But its foundation starts with yours. And if you can find a way to get the consumer to open up your app on a more frequent basis, right, and reach a new audience, like a Gen Z audience, then you can win the attention game.
Paul, how do you support it financially? Because that sounds like a lot of people competing for eyeballs and hits and so on and so forth, but also the traditional advertising model also competing for all of that. So how do you support it?
Certainly. So one is, I should say, the Quick Play just released research working with Gen Z Insights that showcased that Gen Z consumers said they would go and visit their streamer more frequently, 79% they would visit it more frequently if they offered a compelling shorts offering. And what they told us is what they're looking to see is reality programming, original content, highlights and clips from their favorite shows and their sports events. So there's a really clear, defined opportunity for the media companies themselves. Then in terms of monetization, right? Now you're thinking about adding ad units into your short form experience and then promoting to that long form content experience where you can similarly monetize through ads. If you look at the subscription ads over the last quarter, coming off of the latest antenna research, the majority of subscription ads are coming through ad-defined subscription plans. So this tells you there's a huge opportunity sitting in the monetization space relative to ads.
So tiered, right? Like, so you're going to be able to pay for something so you don't maybe get those ads or something, right?
Well, everybody always wants the excuse of the ability to opt out. I would say that I look at Shorts, though, as a way to think about it as a front porch. You make that available to all consumers, and then behind that experience in your long-form traditional streaming experience, you offer the opportunity to not have no ads.
Paul, where does AI come into this? Does it come into this in the sense of it makes it very easy to actually clip and share something, or does it go beyond that? And is there a way for AI to identify that moment that will go viral? Because editorially, people do that. People have to understand what really resonates with the audience.
This is a great question. So if we break apart the Shorts opportunity in two component parts, I'll tell you about the application of AI. The first part is how do you take a piece of long-form content or a live experience and say, what are the viral moments, right? And you can actually marry that with what's going on with Google Trends to actually take the piece of asset, leverage AI, append the metadata to it, and then say, actually, this matches a trending moment on Google. Let's publish in a short form, vertical format into an owned or syndicated experience. So that's all AI driven. The second piece within that consumer experience that you may have as a destination sitting within your app, we're leveraging personalization, right? That's all AI driven, right? Which is to understand what are your consumer likes and dislikes, what do you engage with, how much time do you spend with it, and leveraging that to make it a more compelling experience for you every single time you log in. And of course, then applied to that is all the ad opportunity that sits within that, right? Because now we can also do contextual advertising because we know what the content is, along with the personalization. So you're getting a double hit on AI within the ad delivery component. So really, AI can be applied across the entire spectrum.
Cool stuff. Cool stuff. Come back soon. Love to get an update as things move along through 2025. Paul Pastor, who's CEO of Quick Play, joining us there from CES in Las Vegas. Right now, let's get an update on the trade on this Wednesday. With that, we turn things over once again to Charlie Pellet.
Hi, thank you very much, Carol. Choppy Wednesday right now. We've got the Dow Jones Industrial Average up barely, up by 11 points right now. Little change. Key takeaway, as is the case for the S&P 500 index. The S&P right now lower by a point, has been swinging between gains and losses. The Dow, the Dow higher, as I mentioned. NASDAQ in the red, down 29 now, drop there of 0.1%. 10-year 4.69% with a 2-year currently yielding 4.28%. Gold up $9 the ounce, up by about 0.3%. And West Texas Intermediate crude oil down 1.2%, 73.32 a barrel. Bitcoin right now down almost 2.5%, 94,130 on Bitcoin. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Well, REITs, real estate investment trusts as a whole, have underperformed the U.S. equity market by a lot over the past year. Carol, we know some of the continued struggles in the office market. We know the narrative around the shortage of U.S. housing. And then, of course, we all know what's happening with rates right now. That's not really helping that much.
No, exactly. For a look at the space, what's top of mind with us right now, we welcome John Worth. He's Executive VP of Research and Investor Outreach at NAREIT. It's the National Association of REITs, the industry and lobbying group of the global REIT industry and publicly traded real estate companies. John is here in studio. Welcome, welcome. How are you?
Thanks for having me. I'm great.
Well, it's great to have you here. I am curious, we are curious, what the discussion has been among your members since the U.S. presidential election and win by Donald Trump.
You know, I think one of the great things about listed real estate and REITs is that they've really enjoyed bipartisan support for over 60 years. REITs are really, part of the part of how the vast majority of Americans get access to commercial real estate. Today, we've got about 170 million Americans who have REITs in their portfolio, most of those in their 401ks. So, I don't think there's any concerns about political risks for REITs in terms of a new administration. what we certainly have,
even a higher rate environment.
Well, I was going to say what we've certainly experienced
as a result of some of the
what
policies.
we certainly experienced is a bit of a higher rate environment here. Really, starting in September, and that really took hold in December, and had a really meaningful impact on REIT returns in September. REITs were down 8% in September. They still ended the year up nearly 5%, and we had some good performance across different sectors, including data centers, office, healthcare, all delivering more than 20% in 2024. But yeah, rates have definitely been a concern, and it's something that as we look at our forecast, our hope is that we're going to get to a place where in 2025, where REITs are not, we're not seeing knee-jerk reactions to interest rates. If you look back historically over the last 20 years, what you see is over 12-month periods, REITs are actually positive in periods when the 10-year Treasury is rising in 75% of those 12-month periods. But during periods of monetary policy change that we're in right now, we see this negative correlation.
It's tricky, yeah.
I think in 2025, we may see us move back to where REITs are either neutral to positive to rates.
Well, what happens in your world if we don't get as many rate cuts as people initially thought a couple months ago? What happens if some of the policies from the next administration are indeed inflationary and we don't see inflation come down and we don't see a response that would happen from the Federal Reserve if they were, done taming inflation?
Yeah, well, I think for commercial real estate, that's more problematic. REITs themselves are actually in a very good place to weather an extended period of higher interest rates. Right now, REITs have low leverage historically. They're at about 30% leverage. They have
as a whole?
As a whole,
okay.
The industry as a whole. When we think about the term structure of that debt, they've got about a 6.5-year weighted average term to maturity, and just about a cost of debt that's about 4%. So, and capital markets have been really open for REITs. REITs have been able to go out and issue unsecured debt in corporate debt markets. When the time is right, that they've been able to go out and issue equity. So I think a higher rate environment has some comparative advantages for REITs, as other potential buyers are not able to get deals to pencil out. REITs may find some really nice accretive buying opportunities.
Office REITs already down about 5%. I'm just looking at one metric. That's the one that I think the elephant in the room that everybody wants to know about. What about for office REITs? And just got about a minute left here.
Yeah, I mean, the office environment, I think, is tough. But what we've seen is that...
Still tough.
Still tough, but investors are increasingly starting to differentiate between high-quality properties and low-quality properties. You see that in the New York market.
Is it because we're getting some transparency of some properties that people are either walking away, whether it's B or C, quality properties, and so when they mark down these properties, we get, again, some more transparency in the marketplace?
We're seeing some transparency in sale prices, but we're also starting to see investors understanding, and I think REITs are on the right side of this quality divide, that higher quality properties, and you certainly see this in New York, higher quality properties are doing quite well.
Absolutely.
In fact, we've got some REITs who are breaking ground on new offices because there's so much demand for that higher quality. And don't forget, office REITs were up about 20% last year. So the news is not all dire in the world of office.
Nope. It's location, 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 and tier versus tier versus tier.
And maybe those JP Morgan employees, Carol, are going to be going back to work 5 days a week. We know Amazon employees are now.
Brand spanking new property. It's pretty fancy. Exactly. All right, John Worth, thank you so much, and we appreciate your flexibility as we were dealing with a lot of news today. He's Executive VP of Research and Investor Outreach at NAREIT, joining us right here in studio. Still to come, everyone, might there be an easing in the caps again when it comes to state and local taxes? We get an update from Capitol Hill. Yep.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, this is among our most read stories on the Bloomberg on this Wednesday. A cohort of about 20 Republican House members from New York, New Jersey, and California were invited to meet with President-elect Donald Trump at his Mar-a-Lago estate Saturday ahead of a looming fight over an extension of his 2017 tax cuts. Members of his own party, as we mentioned, including New York Congressman Mike Lawler, already out saying a $10,000 cut is insufficient. Or cap, I should say.
The $10,000 cap is woefully insufficient. It's had a negative impact on states like New York. Taxpayers should not be penalized by living in a high-tax state. Ultimately, our Senate and House Republican majorities are going to have to work together. Nobody's going to get everything they want out of this. There's going to have to be a good faith negotiation if we have any chance of passing a reconciliation bill.
All right, that's Republican New York Congressman Mike Lawler earlier today with what our own insiders are saying. We head to the nation's capital and to someone who is privy to the conversations among U.S. congressional members. He is Bloomberg News congressional reporter Billy House. He's up at the Capitol. All right, Billy, I guess I saw this as someone who lives in the New York metro area. I'd love to see that cap go back to kind of where it was or move it up a little bit. Having said that, I'm just curious, is this just jockeying going on? Is this just chat and conversations, or is this some real negotiating that maybe is going to start?
Well, this is some real negotiating and important negotiating, because you might want to remember that what Mr. Lawler said right there is this is part of the reconciliation discussions as he and other lawmakers will go to visit Trump on this very topic down in Florida this weekend. Republicans have no wiggle room. They must basically, as we saw with the speaker election, get all on board on a huge reconciliation package on all kinds of areas for it to pass. And this is going to be one big wrinkle, because the left and right coasts and where you live are pushing for this salt cap dressing. But the middle of America is not so gung-ho that Westchester County residents or LA County residents want to see this disappear.
What are we talking about in terms of numbers here? What are we talking about in terms of numbers here, Billy? Because $10,000, as we just heard from the congressman, it needs to be way bigger than that. I mean, what are we talking here?
We're talking about a wide spectrum of ideas.
Okay.
New York Governor Hochul today said it should be eliminated completely. There should be no cap. That's her view, and some view of some Republicans. There have been other attempts, including by Mr. Lawler, Congressman Lawler himself, to somehow raise the cap for single or married taxpayers, and that didn't even make it to a vote last year. Just that slice of it, and he's reintroduced that bill today.
I don't know. You know, Billy, you've been doing this. You understand how to read the tea leaves up there. Up on the Capitol, and I am just curious for them to be, invited to Mar-a-Lago. It does feel like things happen at Mar-a-Lago a lot, and probably will through a second Trump White House. That might be sometimes in D.C., but more likely in Florida. Having said that, does it seem more likely that there is going to be some kind of significant change? Because it's kind of interesting. This is such an important issue, as you said, to the left and to the east and west coasts. And so I just do wonder, again, what the visual is on this that says, okay, something's really moving here.
You've asked precisely the right question. Again, it's a little bit like punching Jell-O. They must move. They expect this to be part of that massive package of government spending that with an eye toward Easter passage. But because of their very small, slight House Republican majority, they can lose only 1 or 2 votes, if that much. So then comes the deal making, and if you got half the country opposed to changing this cap, and and Mr. Lawler and others in California and New Jersey and New York wanting to, somebody's going to have to give on something. So that's where the horse trading comes in with other matters. And so right now it's hard to say what's going to be traded, what's going to be dealt with, who's going to give in, who's going to give out, who's going to eat what. And that's where we are right now, very early on in the process.
I can't believe I'm even asking you a question about midterms at this point.
What?
The new class of Congress was just sworn in.
Clock starts.
Last week, but that's, what happens every 2 years here. To what extent, if Republicans are not able to get a higher cap, does this potentially threaten their narrow majority come 2026?
I think a lot of things threaten that, but this is, I think you're correct, is one of them. A lot of people thought this was going to hurt them last year, but the 2017 Trump tax cuts, in which this was a part of this cap, expires at the end of 2025. So they've got to do something this year on it, or just it will evaporate. And again, keep in mind, this helps pay for government too. So you got to make up the lost revenue somehow. And so there's a lot of wrinkles. And of course, Musk's new partner, best buddy, Musk, is already threatening to send money to primary people who don't go along with the game here. So it's really up to Trump and how he presents this and what he embraces, I think.
Well, it's keeping us all really super busy and guessing. Love it, love it. Billy, thank you so much. Glad we could check in with you. Billy House, he's congressional reporter at Bloomberg News, joining us from the nation's capital. Be sure to check him on Twitter at House in Session, or just read his stuff on the Bloomberg terminal at Bloomberg.com. All right, for those who are watching on television, the close is coming your way in just a moment. Tim and I, though, do not go anywhere. Lots to come right here on Bloomberg Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace. Governor Gavin Newsom now says more than 100,000 people have evacuated in Southern California as strong winds spread several wildfires. 2 people have died in the Eaton fire in Altadena. Officials are allowing planes to go up again despite the 70-mile-per-hour wind gusts to drop water on the fires. Ryan Hill is the general manager of 4 restaurants in Southern California, including one in the Pacific Palisades, where many have evacuated.
The winds are so incredibly strong, and there seems like there's nothing that, the brave firefighters can do because it's just so big, so fast.
In all, more than 1,000 structures have been destroyed. Meteorologist Craig Allen says those Santa Ana winds won't die down anytime soon.
This is a dire situation for southern sections of California. It may not get any better until sometime late tonight and on into Thursday. There will be variations in wind speed across the area today, but embers will be blown for more than a mile and starting new fires.
Officials have warned the worst is yet to come. The Justice Department has asked an appeals court to let it release a portion of special counsel Jack Smith's report on his classified documents investigation into President-elect Donald Trump. Former federal prosecutor Lori Levinson weighs in.
The report regarding Donald Trump and the evidence that was found in regard to him and what he did that led to January 6th is pretty much already out there. In many of the legal responses by Jack Smith to pleadings before the D.C. court, we saw glimpses of where that investigation was going.
Secretary of State Anthony Blinken is optimistic the fighting in Gaza may end soon. CBS's Linda Kenyon has the latest.
Speaking in Paris, the Secretary of State said a hostage and ceasefire agreement in the Middle East is very close, although it may not happen before the end of the Biden administration. He spoke even as Israel's military reported its troops recovered the body of an additional hostage in an underground tunnel in southern Gaza. It was working to confirm the identity of a second body. Any ceasefire deal would require the release of the remaining 100 or so hostages.
Alec Murdoch is facing another huge legal payout. CBS's Jim Krasula explains.
A federal judge has ruled convicted killer, disgraced South Carolina lawyer Alec Murdoch owes an insurance company nearly $15 million as punishment for a fraud scheme. Murdoch stole the money from a multi-million-dollar wrongful death settlement intended for his former housekeeper's children.
Murdoch lied to investigators about how the woman died outside his South Carolina estate. Futures are mixed, or stocks are mixed. This is
JPMorganChase.com.
Another major employer is considering an end to work from home.
Executives at JPMorgan Chase may be mandating a return to 5-day in-office work weeks. Bloomberg and the Wall Street Journal report they're mulling over whether to require all of the bank's 300,000 employees, including senior managers, to suit up and show up in person. Since the end of the pandemic, back office staff have only been required to be in offices 3 days a week. But CEO Jamie Dimon has argued it's ineffective and impossible for managers. A decision could reportedly be announced in the next week or two. Deborah Rodriguez, CBS News, New York.
Australian scientists have been testing a new way to fight tropical diseases, genetically engineering mosquitoes with toxic semen so they kill their female mating partners. Only female mosquitoes bite and drink blood, spreading diseases like malaria and dengue fever and killing millions of people worldwide each year. Michael Wallace, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we continue on this Wednesday, January 8th. We're just about 55 minutes away from the closing bell on this Wednesday, a Fed meeting. Those Fed minutes we did at the top of the hour, the 2 p.m. hour. Some concerns, certainly, when it comes to, the Fed way forward, keeping a watch on the labor market, really watching, though, what's going on, continuing based on that last Fed meeting inflation. Having said that, kind of quiet moves here in the market, and we're off our lows, certainly kind of earlier in the session, but again, relatively flat.
Yeah, stock's really searching for direction with kind of some moves between gains and losses on the S&P 500, the NASDAQ, and the Dow throughout the day. We're going to have much more in a few minutes with Charlie Pellet and an update. Carol, over the next couple of hours, big story on our radar. We're continuing to watch the latest out of Southern California where wildfires are raging. Thanks to extreme weather, we got a roundtable coming up in just a few minutes on the connection between weather and climate. Also, Mark Gongoloff out with a column about the insurance industry and what this is going to do to the embattled insurance industry moving forward.
Yeah, I would anticipate that rates are going up, but we're going to talk about all of this. Also, what did Jensen, as in we're talking about NVIDIA, say that has quantum computer stocks taking a hit today? We're keeping an eye on this. Our Bloomberg Intelligence analyst joining us live from the busy floors of CES out in Vegas.
And a read on real estate and the economy with the CEO of the international conglomerate that's one of the largest landowners in the U.S. They do it all, Carol. Farming, ranching, energy, commercial real estate, and more.
They see so much, so looking forward to that conversation. First up, though, let's get back to the markets. The day's trade, your top business stories. Once again, it's over to Charlie Pellet.
Hi, thank you very much. And here's what's going on. Equities barely budging after the latest Fed minute showed officials adopted a new stance on rate cutting amid elevated inflation risk, deciding to move more slowly in the months ahead. So here's where we stand. S&P right now just about flat on the day, down 2 points at 59.07. The Dow higher by 4 points now, little changed as well. NASDAQ down 34, a decline of 0.2%. Ahead of the jobs report on Friday, the 10-year 4.68%, the 2-year 4.28%. Gold up $11 the ounce, 26.59, up 0.4%. West Texas Intermediate crude 73.45 a barrel, down 1.1%, and Bitcoin now down 2.3%, 94,208 on Bitcoin. As for potential market catalysts, Abby Yoder is U.S. strategist at JPMorgan Chase Private Bank.
Yes, Friday is very important from a labor market perspective. I would say our view on the labor market at the moment is that it's loosening at the margin. It's nothing to be very concerned about, and it's loosening to an extent that allows the Fed to continue to cut. In terms of catalysts in the near term, I think the most important thing really is going to be earnings, which is coming up starting next week. So I think that's something that we're very focused on.
Yoder was interviewed on Bloomberg Open Interest. Banks will begin reporting a week from today. JPMorgan Chase, Wells Fargo, and Citigroup again all next Wednesday. Recapping, S&P flat on the day. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Shares of companies linked to quantum computing tumbling today. This after NVIDIA CEO Jensen Huang said that Quote, very useful quantum computers are likely decades away. I mean, we're talking declines of more than 30%, some close to down as much as 40% today. D-Wave Quantum, Quantum Computing Inc., Rigetti Computing, and more. We got with us Kunjan Sabani, Senior Semiconductor Analyst for Bloomberg Intelligence. He joins us live from CES in Las Vegas. We're going to talk about what Jensen said in just a few minutes, but the big theme out of CES this year, I know there's a theme every single year. I've been there a couple times, oh my gosh, more than a decade ago at this point, Kunjan. What would you say is sort of the big theme? What's the vibe?
Well, it's what everyone expected. It's about AI. What's different, though, right now, the focus that we have seen is pushing AI into PCs, pushing AI into consumer electronics, given it's a CES consumer show. And definitely, one difference we saw, in the past few years, auto has seen a lot more attention. But given the softness in the end market, we have seen a tad bit lackluster attention given on autos when it comes to AI.
All right, what about quantum and quantum computing stocks? Are people talking about that? And I feel like we are slowly talking more about it.
What is it? What even is it?
What is it is a good point.
You have to put in context, right? Fundamentally, nothing has changed underlying. About a month or so ago, Google made this announcement which caused these stocks to jump. Again, it was sort of buy the news, and what we heard from Jensen yesterday seems like sell the news kind of an event. So seems highly trading and speculative rather than an investment perspective. Fundamentally, I don't think there is a clear idea or a path to a time frame and a dollar number when this technology will be commercially monetizable at scale. So that has not changed.
All right, but go back. I can't explain it. I don't know. I can read. I can Google.
She can do those things. I can attest to it.
Quantum computing is like, is it?
Can you quantum?
Is it Gen AI to a whole other level? You're talking about computing and dealing with really complex problems, right?
Yes, I wouldn't, at this point, the way it's defined, again, that's changing, and I think it will change. But at this point, they're two separate things. Gen AI right now is about accelerating workloads. To put it very simply, you want to accelerate and compute a lot of data in a short period of time, versus the way quantum computing is approaching right now is taking a much smaller amount of data, but running a very high level of compute, very high level of combinatorial in a much efficient manner. So we think the first phase of quantum computing will be complementary to what we are seeing with Gen AI, where these larger models, which can take up so much data and efficiently transition them, and then you go to singular problems of taking less amount of data, but computing it to a greater extent and in a much faster way.
Right. I know people think about it for drug discovery or financial modeling, so it's just something that's starting to come into our psyche.
Hey, Kunjan, have you had a chance to really walk the floor and kind of check out the sort of highlights of CES this year? There are many floors at CES. It's absolutely huge. But have you had a chance to do that?
I have, yeah. For the last 2 days, and it's...
What are the gadgets and gizmos? Anything sticking out to you?
So many. There's just to call out the most extreme things I've seen really high-end AI gadgets for pets. The gadgets that even I can't afford or enjoy are delivered just for your pets.
I love that.
What?
Gadgets for pets that are more expensive than gadgets for most humans.
There's like AI hair dryers for pet, AI spa, and sort of relaxing mental mindfulness for pets.
You wanted flying cars, you get mindfulness for pets, Carol. Sorry.
I already want to come back as my pet in my next life, because both of my dogs are living a really, really gem of a life. Kunjan, thank you so much. Have fun at CES. Look forward to talking more when you come back. Kunjan Sabani, Senior Semiconductor Analyst at Bloomberg Intelligence, out there in Vegas at CES. He's walking the floors. There's somebody who also walks the floors when it comes to retail, in particular off-price retail, is our own Poonam Goyal, and she's got a story that we want to talk to her about.
Shares of eBay are the top gainer in the S&P 500 today, surging as much as 13%. This after Meta Platforms offered to publish listings from the online auction company on its Facebook Marketplace service. Let's get to it with Poonam Goyal, Senior Analyst for E-commerce, Athleisure, and Off-Price Retail from Bloomberg Intelligence headquarters in Princeton, New Jersey. What exactly is going on with Meta Platforms and eBay? Explain this for us, please.
So Meta's been basically told that they need to make it a more fair marketplace, and they're allowing or testing with eBay their own listings on the platform. That's great news for eBay because now they can expand their visibility onto Meta, which attracts over 1 billion users a month versus eBay's at only 133 million users as of the last quarter. So a huge opportunity for eBay here to really connect with the broader audience.
How huge? I mean, investors are super psyched. Poonam, as Tim mentioned, stock's been up more than 13%, still up about 9% in today's session. I think it's my #1 gainer when we chat with our TV colleagues shortly this hour. I mean, are they right to be this enthusiastic, or time will tell? Or can you already start to model a little bit financially?